the non-life insurance market day 1 and day 2, and there were definitely some questions, some queries from the floor as well as to how can policies or what type of challenges or what type of practices can come forward for life insurance market. So ladies and gentlemen, this is the perfect session to discuss that. If you have any questions, please make sure that you engage and ask our panelists and speakers towards the end of the session. One more time, requesting everyone to kindly come in and join us. We will begin in the next 2 minutes. We believe that the previous 2 days have been a fruitful one with a lot of learning, insights, knowledge. There was a sharing of experiences and practices that are happening locally in different countries as well. We would like to thank our audience for being really engaging as well throughout the sessions. So one more time, a humble request to all our distinguished guests who are still inside the Regency room to kindly come forward and join us. We are now starting with session 1 for day 3 of Asian Insurance Meet, Building Resilience of Insurance Towards Emerging Risk. Ladies and gentlemen, we're starting with the first session, Life Insurance Market, Practices, Opportunities, and Challenges. We have 2 presenters for this session, 2 panelists, and our moderator who are all set and ready. So without any further delay, we would like to start with the first session. And may I please invite our moderator for this session, Mr. Sultan Ul Abedin Mullah, Managing Director, Academy of Learning Limited, to kindly join us on stage. We'd also like to invite our presenters on stage, Mr. Poshak Raj Paudel, CEO, Citizen Life Insurance Company Limited, and President of Jeevan Bima Sangh, Nepal. We'd also like to invite on stage Mr. Yoshihisa Ishii, the Foundation for the Advancement of Life and Insurance Around the World. We'd also like to invite our panelists of this session on the stage, Mr. Subramaniam Kulimarla, Consultant of Nepal Insurance Authority, Mr. Bojraj Sharma, Chairman, Insurance Institute of Nepal. Ladies and gentlemen, like previously mentioned, in these 2 days of the Asian Insurance Meet, there has been a lot of discussions about what kind of challenges does the insurance industry face or is going to face in the coming days, and what can be some of the best practices to be implemented. How can these challenges be turned into opportunities? And today, we'll be talking about life insurance market. And without any further delay, may I please request our moderator, Mr. Mullah, to kindly begin with the session.
Thank you. Assalamu alaikum and good morning to you all. I am Sultanul Abedin Mullah from Bangladesh. I am former regulator also, and I am now heading an Insurance Training Academy, Academy of Learning Limited. Actually, I am experienced in different countries. This type of conference or seminar, if it is 2 to 3 days or 4 days, in the end day, actually in the first session, it is difficult to gather the audience and the participants. However, we are something late, but I hope I will finish it in time. Today's subject matter is life insurance market, practices, opportunities, and challenges. So we have 2 speakers here, Mr. Poshak Raj Paudel. Sorry if I cannot properly pronounce name, pardon me. And we are happy. We have a Japanese speaker here who is from the developed market. He will also present papers today comparing Japan market and Asian market, especially the Nepalese market. And we have 2 other. He's Mr. Ishii. Yeah. So we have 2 panelists who will actually see the papers, and they will, they may criticize or they may advise something, and finally they will also answer your questions and reply you. And the Nepal Insurance Authority actuarial consultant, Mr. Subramaniam, and Mr. Raj Sharma, Chairman, Boraj Sharma, Chairman, Insurance Institute of Nepal. Yeah. So I'll not take too much in the beginning. So I would request first Mr. Poshak to present his papers in the audience.
Thank you. Thank you. Good morning, sirs. Special thanks to Chairman, sir, of Nepal Insurance Authority and all participants. Yeah, today, this is the first session. We are going to talk about life insurance, Nepal's market, and its practices, challenges, and opportunities. On that, my presentation will be based on the Nepalese market and nearby countries, some statistics and comparisons, where Nepal stands and how we are practicing our various business models and emerging markets, challenges and opportunities. I will altogether present my presentation here. Begin with, these are the topics that today we are covering here. Yeah, disclaimer, the information is based on the available information, best available, and that please do not decide on investing or doing any further due diligence from your side. This is for only info. And market overview. Here, macro level, we are talking about the how macroeconomic is growing and what level of competitive situation of Nepal is currently having, and what population per company is presenting in the Nepalese life insurance sector, and what indicators are at the top level of the various countries, which country represented what level. And green marks, green circle is indicating that which country on what indicator is top level, which is the highest one. Highest may not be in all respects it is a good, but in many respects it is indicating that it is a better performing. And in terms of earning population of the various countries is much lesser, around 50% in grossly in terms of total population, and those earning population are the life insurance market. Going to next slide. Company overview. Nepalese insurance players, number of players, altogether 15 are there in the life side and other 14 and 2 reinsurance, and altogether 9 companies are merged and they became the more capital-based company, and they are operating jointly now, and the 7 micro insurance are under pipeline to operate. Out of all insurers, life insurance are growing significantly compared to year over year, 20 to 21, 21 to 22 comparative. We are growing around 14% plus in terms of total premium basis, accordingly paid up capital and the insurance penetration growth. Everything is growing very nice way, and it is growing encouragingly. And even our density, GDP penetration, it is a very good growth in terms of total premium and the other key indicators. And despite premium growth, we are growing significantly in terms of last 10 years CAGR, CAGR, around 33% in new business and around 27% in total premium basis. If you consider down the line 10 years numbers, we grew from 16 billion to 139 billion numbers. That is one of the best growth comparing to neighboring countries. And that is a good contribution from all the players. And new business, slightly flat compared to last year, but overall, we are growing significantly. In terms of total insured to total population percentage, on that respect also, in recent few years, our growth was commendable. Let's see a bar graph, where we were in 2011 and how we are progressing in 2012, 13, 14, gradually how we grew, and what is our population to insurance penetration, number of insured, based on insured number. After 2017, we took a significant growth on the insured basis. That is one of the great achievement in terms of insurance penetration with the insured basis. Yeah. And this number includes compulsory insurance of foreign employment and the term insurance, that is traditionally we call micro insurance as well, that is a term insurance. That is a good growth. Similarly, that growth comparison of all those product mix. And here, product mix includes number of policy, enforced policy, and the premium contributions with the line of business. Traditionally, conventional products, endowment type of products are contributing high on the basis of premium collection, but their number of policy enforced is term insurance. And our focus and our future is also term insurance, protection insurance. Accordingly, number of policy is being significantly improved in last few years, this indicates. And current practices, how we are practicing in the market and what is the major key drivers for our practice and effects. Here, out of our total insurance markets, life and non-life insurance directly underwritten premium is being operated under the Nepal Insurance Authority, and there are a few players, few entities which are selling protections from the government entities as well. They are also selling good number of premium and protection premiums collections. This is a collected premium basis, underwritten basis, and the Social Security Fund, Health Insurance, Citizen Investment Trust, Deposit and Credit Guarantee Fund, those entities are also selling products, selling protections. And there are good number of, though nowadays it is significantly decreasing, but there are good number of premiums and the insurance products is being bought by neighboring counties, life insurance products. That is also there, amount is not quantified here. These are the protection markets altogether. And in terms of distribution mix, individual agency is a prominently dominating line of business in terms of distributions, around 87%. I took as all ordinary life under this line of business, and corporate agency is moreover micro insurance, and which is being sold by microfinance company and cooperatives, that is a micro term, around 2.9 billions, and direct sales, that is a foreign employment business. I grossly took this line, that is a product mix, and we are operating as a morely individual agency, that is a practicing three-tier agency, which is a professionally proven system outside the countries as well. That is a distribution mix, and here in my next slides it will cover that how we have to balance these things and what are the areas that we will go further enhancing the distribution channels. Here, investments, what instruments are, investment instruments are available in the south, our neighboring countries, and what area that we are investing comparatively and comparative analysis, and what are the key areas that we can look into this. And mainly, Our neighboring countries are focusing on, or they are going for government securities, bigger pie, large number, due to not availability of competitive interest rate and the good return that we are replacing with, or we are switching that option with the fixed deposits, which is the matching line number compared to other government securities. And similarly, other line of business, debt security is highest in the other than these two line. And moreover, this is a kind of available options seeing the competitive markets and nearby countries scenario. And expense ratio, how Nepal is performing comparative with the other countries and what level of expenses we are incurring based on that. Here, and our expense ratio is economical, effective, and seeing this, we are in good shape to perform the expenses economically and scaling the business and managing the expenses. Here, I'm not elaborating further because table itself is self-explanatory. That's why I'm not going and explaining much on this. And another table, business to profit ratio. What level of business we are doing and what level of profit we are earning and what earning nearby countries are doing. And our earning is slightly in and above of India in terms of business to profit earning ratio. And the Maldives, even Sri Lanka, Pakistan and Thailand, those countries are earning better than us. And that is one area that we can see from these pictures. Capital to business ratio. What level of capital they are having and what level of business they are contributing. And different country has a different experience, and India is doing best in terms of 2,000 times they are doing business with their capital, and we are doing 300 times of capital. Our business volume is that level. Accordingly, other countries are also better performing than us in terms of capital to business. And next, capital to profit. What level of capital we are injecting and what profit we are earning. Here also, our Nepal business, Nepal life insurance company are earning at lower level compared to neighboring countries. Here also area that we can learn from nearby countries that how they are better performing and what are the key areas that we'll have to improve from our end. Yes. Our core business area is people. People's demography compared to nearby countries up to developed market of Japan. What is our situation? What level of population and what level of age group we are having here? And among all the country, we are the youngest country. That is a market, that is a future. Compared to learning in all respect, may not be a fit for the going forward strategy. That's why we'll have to learn nearby demographic segment area that where we can move ahead and we can best learn from those areas where it fits for us. Here, our Nepal's demographic segmenting of those male and female, in the total basis 48 to 50%, 52% of male-female ratio. But earning age segment, we are 46 to 54%, which are paying capable of buying insurance. And here, around 91% of our market. Altogether, in 91% market, 20% around is below poverty level, and around approx health and physical problems having a population is around 10%. Altogether, we can consider those area excluding our market. This indicates that we are healthy in terms of life insurance business, and we are having a good potential for the growing. Challenges and opportunities. Yes. Challenges. I have divided 5 major points for the challenges and opportunity both end. There might be a more points. Yeah, we have a good, let me start with the challenges. Agency concentration is one of the challenge that where we, around 87% of our business is focused on agency. That is one of the area that is concentrated. We'll have to go for alternative way. And professional agency and retention. Making agency as a professional and retaining them in this profession is another challenge. And weak infrastructure because of our geographical situation and all these things. Accessing those area and providing service on those area is another distribution challenges in terms of capability enhancing of distribution networks. Demographic, outgoing expats, outgoing workers and outgoing young youth graduates is another challenge. And health and healthcare systems for doing for good underwriting as well as for servicing and claim settlement also one of the area that below poverty level is 20%, that is another demographic challenges. In economic side, economic vulnerability, ups and down, and the currently slowing down of economy is another one of the area that we consider as challenges. Huge informal economy is still yet to come as a formal sectors, and poor industrialization and employment. For life insurance, industrialization is a key for foundation, and it is also one of the area that Nepal has to do a lot and improve a lot, and employment also another area. And regulation, in the challenge side, increasing regulation and compliance. Day by day, globally, it is increasing. And here also we are having a similar experience. IFRS 17, risk-based capital, ORSA, AML safety, and many. These are the area that we have to prepare for it. Other government entity are also selling protection that I already show in my earlier slides. And historical industrial data, getting from regulators is another challenge, that whole industrial data. And industry side awareness and trust gap is still long way to go for making best awareness on the insurance sector. That is, you have a risk, and risk is there. And the trust gap is still insurance sector pay off, and insurance sector give a better service. That is our one of the area that we'll have to increase our trust. Pricing risks on climate and related risks, that how to access those climate things, how to model this, and how to bundle in our products. That is another area that we'll have to work it out. And assessed liability mismatch. This is one of the big area that our assessed liability is highly mismatching in terms of investment and our product liability. And technology adoption and cyber security. Yeah, these are the emerging risks on the global side. And technology adoption in line with other business sector and banks and other areas, there we are slightly slow. And opportunity side, we can see ample of opportunity since we are growing. And captive agency, one company, one agent, that was a recently new act has enacted, and then it is introduced. That is one of the area that we see this as an opportunity. And the quality agency system, it is now introduced and they roll out. And due to that, quality agency will be there, and now with the new act, the academic requirement level also enhance, that also will enhance the quality of agency. Unemployment, high unemployment will help to encourage people to come into the agency's career, make them career in this profession. That is one of the area that we can go for it. And our 3-tier systems, which is a global practice, which we are adopting here, that is also making them to run their professional agency and team. Diversification channels, brokerage, banker, telemarketing, and direct marketing is one of the area that we'll have to go for it. Still, these are not open yet at this point. And the demographic side, growing middle class, wealth is spreading in small towns and areas, urbanization and concentration is going on. changing customer preference and choice, expanding with economic area, expanding microfinance activities, and the mobile and the bank account users is 100% population are being covered. Growing economy is one of the economic area, and the regulation side is a new insurance act, and regulation is one of the opportunity that we can do a best practice. Strong capital base and synergy from merger, good number of mergers took place, and going still. Insurance awareness campaign by NIA. NIA is a Nepal Insurance Authority is taking strong initiative to go for rural and the local level for awareness campaign, and insurance development fund and all these things is being new things which will be helping for a great opportunity. Industry, emerging market, and risk is increasing, that is market for us, foundation for us. Automation and scaling, these are the area. And summarizing with a way forward, area that we can look into this, and I have divided 5 parts. Digital policy, digital payments, digitalization, cost minimization, there are many areas that we can look into. Even dematting, here we demat our shares, similarly we can demat our policy also. There are many areas, AI-enabled service that we can go for it. In terms of distribution diversification, reopen Banca, introduce digital channel bank, brokerage, aggregator, strengthen agency, which have a big pie, professionalism, full-timer, career retention, and tech-savvy agency. With regard to product and mix and shift, still we are a very conventional products focused. Now we'll have to migrate to saving product to protection. That is based on research and need. And still we are more dominant on the death protection. Now we'll have to move to living benefit side. And here we are more focused on the death side, but annuity products we are not focused. If there is a high death occurs, there is no trade-off. If high death occurs, then annuity products make you profit, and it will trade off on your product side. And regulatory framework on digital policy and many more on the product side also. And capacity, resource development, capacity building, gap analysis, and innovative, and the best practice we'll have to do it. And awareness and trust. Many areas that we can work it out with the local government, local community, and school, and various groups. Claim settlement also help to increase the trust. Efficient service, and compliance and transparency is the key for enhancing and increasing our trust, and their belief on the insurance sector will pay off. Thank you. Nice for hearing. Thank you. Thank you for hearing. Yes, thank you.
Thank you, Mr. Poshak. You finished in time. So we go for the next paper, Mr. Yashi. He is the director of the Foundation for the Advancement of the Life and Insurance Around the World. FILA. Huh? Falia. Yeah.
Okay, thank you for having me here. I'm very happy, and it's great to be here in Nepal and had a chance to talk with you this time. Okay, Mr. Poshak explained about the current situations and challenges and for this about Nepal. So my part, I will go to the Japanese history and get some input on the Mr. Poshak's presentation for further discussion with our panelists. Okay, this 20 minutes, I have to go fast. This is Japanese industry, in the insurance industry's idea, big picture to give you. Japanese, this is a global share of the premier volume. The United States is #1, and followed by China, and Japan is the 3rd place. It used to be a 2nd, but now China is picking up, and now the 3rd. Okay, this is kind of idea what the Japanese insurance market. The population is 126 million, and GDP it says 4.9 trillion. And the point is, real growth rate is 0.8%. for decades, almost no growth. On the other hand, Nepal is 4.2, means lots of growth and potential. Premium income, claim payment, Japan, 250 billion income. On the other hand, claim payments, it's 135 billions. So premiums come and go out for premium. That means we are already in a matured market. On the other hand, Nepal C, 1.03 billion versus claims is 30 million, right? It's accumulating stage. So stage is different. I'll skip this. And penetrations in Japan right now, 20 years old, roughly 50% people have their own insurance. But when it comes to 30 years old, 40 years, having the families and children, and 80%, 87%. So you have 10 people, and 8 people have the insurance, and also they have multiple ones. And just one person doesn't have it. That means most of the people, Japanese people, know the life insurance, have the life insurance. But this happens suddenly? No. It takes a time during the change of the social and environment and history. Let's go back to that one. Okay, social changes. This is how the Japanese economy grows and how the insurance, this is a sum insured amount, and grow up. It starts, this starts from 1955. And in Japan, we lost the World War II in 1945. The other time, everything is wiped out. Nothing there. Everyone is poor. And my father was at the time, he is right now 91 years old. So he was something like 12, 13 years old. He told me at the time, no food, no clothes, and nothing. No Toyotas, no Sonys, nothing there. But during the 1970s, 80s, Japan is working hard and picking up the growth, and come to the around the 2000, it's leveled off. But during these 60s, 70s, 80s, GDP's economy is growing up. Along with that GDP growth and economic growth, insurance also picking up along with that ones, right? Probably most of the country here, it's this stage, probably it's growing fast, right? So some indicator might be, you can find from Japanese experience. Okay, what happens in the social changes in Japan? The time the 1950s, most of the people from the farmers, the 50% is farmers. Just they live in a local, live in a big families, but along with the 2000, service industry is going up. Means people come to Tokyo, Osaka, big cities, living from big families, coming to Tokyo, the small families. So this is on the families and the situation. So the elementary family, that means father, the mother, and children, small families is getting more, not the big families. That means if you have big families, they are supporting each other, but the small families, if father died, something happens. So insurance demand is growing along with the years. So the insurance market is growing along with the GDP. And this is the labor participation for the female. And the red circle is in 1975. Only the 40% people, ladies joined the market and the labor market work. So most of it stay in the house. But right now, it's almost 80% join the workforce, means they work. Used to be husband work, wife stays, husband something happens, wife has problem. So that's why insurance comes out. But now, both of the father and mother work. So that means they have a capability of the life and economic power. So the demand for the life insurance has changed also. And other things, birth rate, that's a big problem for Japan. You see the bar, it's the number of the newborn baby. It's decreasing. The graphics, the blue ones, it's numbers, how many children the one lady have. And right now, it's like a 1.3 or something. So two, father and mother and one kid, 1.3 kids. Generally means we are losing their populations. But this is the number of the Japanese population up to the 2010. The populations go up. After that, we are decreasing, we're losing. Along with that, look at the green area. That's our productive, the population that's been 15 years old to 64. It's decreasing. On the other hand, blue ones, it's over the 65 years old. So right now, almost 1 out of 3 people is over the 65. You go to Japan, you go to the street, you see 3 people, 1 is over 65 years old. That's the reality. So that means we have a different situation right now compared to the 1960s, 70s, 80s growing situation. Okay. This is a project Mr. Poshak explained. Far left is Nepali ones. The center is Japanese one. You see, I explained more and more and the older people. I put the left. What is that one? That is a Japanese population distribution at the year of 1970. Look at the 1970 Japan, far right and far left, Nepal right now today. Don't you think it's a similar ones? So that means, from the 70 to 2023, Japan is shifting like that ones. What happened to Nepalis right now, okay? Okay, then what happens to Japanese market? I explained already, and along with the GDPs, life insurance, some insurance going up, but after the 2000 it's going down, means that is some insurance and protections. What happens to the premium basis? Like this. So actually up and down there, and around the 2000, that was interest rates going down, some of the insurance companies bankrupt. That's why that affect, but except that one, premiums keep going. So that means different, the product needs are coming. A little bit about the distribution channel of the life insurance. Still 50% more is direct salesperson, means insurance company recruits the agent directly, work for the life insurance company. But more and more different agencies and bank channels coming up. Back to the 1970s, 80s, in the growing part, agents, direct agent is, I think it's like 80%, closer to 90%. But right now, people have the different values, different lifestyles, so agency channels is getting less, and more and more different channels is coming up, including TV and news and internet. Still small, but they are less. Right? Just an agent channel used to be 444,000. Right now, almost half. So it's changing. Okay, I put the different angles how the Japanese penetrations is like closer to 90%. One of the support comes from the government. I don't know you have some situations. We have an income deduction for life insurance premium on the tax basis. So if you buy the life insurance, some portion of the life insurance premiums deduct from the tax income. It's not a big amount, but still, if agents go to explain to the customers, oh, why don't you have a life insurance to reduce the tax premiums? On every year, at the end of the year, people will filing the taxes and always says, do you have the life insurance? So people started to realize, okay, life insurance is maybe, contribute to my entire taxes. So that helped for a long time. And also inheritance tax, when people die, we have to pay the inheritance tax. Also, if you have an insurance, that will deduction. So government help to prevail, to understand for the people, okay, there's life insurance. Back to the 1960s and 50s, they don't know the life insurance, even in Japan. But right now, people know that one. So that helps. So I will give you some idea. Okay. The product. In the 1970s and 80s, most of the product is an endowment product. Probably Nepal is the same one, right? And the Nepal is in a growing stage. Penetration is not much, people don't know about life insurance. In this case, complex product is not good. The agent is not well educated. So we put a very simple product, endowment. And the direct salesperson, we train the salesperson directly. In Japan, the direct sales agent have to come to office every morning in the 9 o'clock to have the morning meeting, to have the training sessions. So that goes to they are doing door-to-door sales and try to penetrate the market. And along with the growth, something happens. This is a traffic accident risk. So 1960s in Japan, we had a big social problems. Lots of accident, people die with the traffic accident, car accident. So there were social problems. So people start thinking, okay, it's dangerous in Japan. So they have to, okay, it might be, we have to prepare at the time, only if husband works and wife staying at home. So if my husband dies, what should I do? So agents come to door to sales, talk to not a husband, going to the wife. Okay, what happens to your husband? You haven't got it. So lots of things happening. So they need more protection. That comes with the endowment plus term riders. So more protection coming up. So at this stage, people started to understand life insurance is not a saving only. We have a protection need. So, that comes to their mind in Japanese. Okay. Then 1980s and 90s slightly changes because we have an aging societies. People started to understand, okay, we're living longer. Endowment, let's say by the endowment 30 years old, maturity 60 years old. But after that, how do we do? Already have some sickness, we cannot buy the new insurance because of his problem. So, okay, why don't we have a whole life insurance? Because it's got whole, right? So that's come to the whole life is more popular, getting more popular. And interest goes down, so, the saving portions, we have to invest different types of things. That's coming to 2000. And right now, people they have a different the lifestyle. The wife started work. They have the earning power. So medical products getting more popular right now. You see, after 2000, the medical products is kicking up. So that's a way of how insurance the Japanese society is changing, and how do we react to those changes from the life side. That happens to explain to you. What are the current challenges? We have a lot of current challenges, so I can't cover all of things, but along with this presentation, just one topics from the marketing side. Okay, now the CX, customer experience, and digital transformations, that buzzword everywhere. I looked like, every company is trying to figure out what is the DX for the company, what is the CX for the company, still struggling. But I pick up some of the, this is Neo Fast Drive in Japan. They see this CX, DX like this. And it used to be, the company look at the market and the customer in the mass market. But gradually we have to focus on the, each customers and what they want, what their life is, what kind of the needs they have. They try to focus on the customers, which we could not do in the past. But right now we can do that because we have digital information, right? So used to be, customer information is stayed in an agent. Company doesn't have it. But now using this application, whatever it is, we can access the customer a lot. So we know what the situation of the customer, what the stage of the life, the health conditions. We put those information into the product basis, offer the right product to the right customer and right time. So this comes in used to be to access the customer is one time, one way. But now, we have multiple times, multiple way, two-way communications that we have to understand the customer and, access to the right person, right time, right way. One of the products that Neolife introduced is a health age concept. Used to be, we sell the product. Okay, how old are you? Okay, goes to the premium table. Okay, this is how much. But now it's changed because at the age of 40s, some people are healthier, some people not exactly, may not be fair. So it depends on the health, situation. That means MPMI, the blood pressures. They calculate through the big data analysis. Okay, you are 40 years old, but actually it's 38 years old. What could be? You have 2 years old. So depend on the health age, they calculate the product. And 3 years renewal, so you join the product 4 years, 3 years later, the agents communicate, okay, you have to stay healthy, otherwise your premium is going up. If you stay healthy, your premium is going down. So that communication is happening through this product. So this is one of the ways to communicate the product and to the client. Okay. This is one of the homepage they offer to customers how to calculate the premium through this one. Okay, those kind of lots of customers, the access to customer, communicate to customer. That's the way we are going. Okay, last 2 minutes. I got a different part, totally different ones. Okay, this is contributing to society. We have a natural disaster like COVID-19. This is hospital benefit we pay out. You see, 2021 January, the March, the payout is going up. The reason why it's not exactly the COVID-19 things. That when the COVID-19 started, Japanese life insurance come and get together. Okay, what do you do? In the contract says you are hospitalized in a hospital under the under the doctors on the suggestions. We pay after hospitalized the payment benefit. But in that COVID-19 situation, people cannot go to the hospitalized because it's full. They are get COVID-19, but they cannot go to the hospital. This is a country's risks. So the government, the insurance company get together, okay, we should pay out, even if they are not hospitalized. We have some certificate under the doctor's guidance, we pay out. Then we did that once. That's the right things. But that comes to the, some people, well, some situation, they are not serious, just stay in the home, not go to hospital, but claims come. Okay, I get COVID-19, so the payments suddenly is going up. So actually, September right now, this treatment, special treatment has finished. So right now going down, but things happen. This is a natural disaster. As a society, as a member of the society, insurance is pre-acting to deal with the situations. We pay out voluntarily to the customers. It's good things, but this happens. The contributing societies doesn't happen this COVID-19. It's back to the earthquake, 2011, that wiped out 20,000 people died by the tsunami. At that time, insurance contract says, okay, you come to the claim, we pay. But we cannot just sit on the headquarters waiting for the people coming to the claims. We cannot do that when 20,000 people die over there. They just evacuate almost nothing. They don't have policies and nothing there, no certificate. So actually people over there, this is walking around the disaster places, go to the evacuations, the centers, finding out the customers, okay, you have the policy of my company, so why don't you give the premium? That kind of things they did. Because we are member of the society, we have to do action, pre-actively, we have to go to the customer. That's why I do this. And also, for example, grace period used to be 2 months, it's going to the 9 months. And also, you need some special document for the claims, but we waived because they have nothing to on the evacuation center. So that kind of things. Yes. So probably disasters happening in that case, we insurance company just sit back on the headquarters. And we pretty actively go to the customers. We support the customers. That will earn our trust of the life insurance. That goes to the the loyalty of the customers, and people understand that why life insurance is important. So that helps, and we have to keep doing all the people in this room. Okay, slightly over the time. So, but I finished this year. Thank you.
Thank you, Vishy. It's very informative papers, and I hope everybody enjoyed and learned more from both of the papers. Now, I would go to the panelists, and I would request them to make their comments and, if anything, observation. So at first, I would request Mr. Subramania Kolimara. You can go there if you like. Yeah, go.
Thank you, Chairman. First of all, I must thank the NIA for giving me an opportunity, and also the co-partners for all these things, and the NIA staff, and the insurance industry here, for giving me a great opportunity to be before you and speak to you. Both the presenters, speakers, made a very good presentation. Mr. Poshak has made about the insurance market in a nutshell in Nepal, and also Mr. Ishii in Japan. But I want to ask you one thing to all of you in this hall. How many of you have not purchased a life insurance contract here? Anybody? Everybody purchased an insurance contract, as it looks. That's great. So good insurance penetration. That's great. But one thing, what I wanted to say is insurance is just a promise. You are not able to see the insurance contract. The promise is made by the insurance company to the purchaser. On the happening of some insurable event, I'll pay the money. And insurance is sold, and it is not bought. So for so many years, I have been thinking, why this product is not bought? What is the way we can do so that people can feel the need of buying insurance contracts and buy, just like in a shop? Is there a way, can we do one thing in this regard? From regulator side or from industry side? That is a big challenge before you. How do you make this? Making ads will do, insurance awareness programs, insurance education. What are the things which we need to do? So that is a big challenge. Okay? I have seen the presentation of Mr. Poshak. Of course, he has covered most of the things. And he has covered about risk management in some fashion, enterprise risk management, which is very important, which is getting a lot of importance throughout the world. The other thing is making use of the artificial intelligence now and machine learning in the insurance activities. I am very happy to note that the NIA itself is going towards paperless organization, digitalization, everything, so that the services to the insurers will be very fast. And the same thing is expected from the insurance companies to provide such services. Okay. Having been as a consultant to this NIA, what I observed was, one is, of course, the lack of actuarial talent in this country. Something has to be done in this area so that we should produce some actuaries. I think insurance industry should take some interest in this. That's one important area. Of course, other professions also important, like underwriters, investors, investment managers, etc. And of course, IT is very important. Because unless you report very fast to the regulator, a regulator will not come to know what is actually happening in the insurance industry to take any corrective measures in the interest of the policyholders, etc., which is very important. The one thing regarding insurance penetration, of course, Pujan was mentioning it's around 3.67, if I am correct. Whereas our friend has shown as about 2.5%, something like that. But when I saw the figures, your total GDP and the premium amount, it appears to be a bit more. Something has to be checked in this area. Okay, but as Poshak was mentioning, you are a young population, there are very good opportunities, and there is a very good scope for expansion of the insurance business in this country. We are only confined to only few products like endowment, whole life, money back, etc. Term assurance is not very much. When you observe in Japan, the term assurance is the major chunk of business of the insurers. It is not so. That means people think that protection is not that important. Savings is more important, as it looks to me. Something needs to be done in this area, maybe due to lack of insurance education. On this insurance industry, maybe insurance association should take some initiative to educate the people to buy protection policies, which is the core job of the insurance companies. Okay, of course, I don't deny that savings products are not really important. They are also important, which is good for the economy also. So what I wanted to say was some product innovation is necessary in this country. Particularly what we observe is linked products, pension products, annuity business, etc. These are the need, in fact, in this country. I think something needs to be done in this area. Okay. Investments also okay. Investment returns are very good. Maybe you need to have still long-term investments so that the insurers can sell annuity products in case of life insurance business. Overall, the market is very much developing. I'm very happy to note this. And still will be growing at a higher pace with the strength of the regulatory staff, with the new insurance legislation, which is very much user-friendly to all of you. And I should say is a friend philosopher guide to the entire insurance industry in this country. I'm here to help you also in this regard as a consultant in this regard. So thank you, Chairman, for this opportunity. Thank you.
So now I will go to Mr. Bharat Sharma, is the chairman of Insurance Institute Naples, so CEO of Insurance. Here it is, yeah, okay, fine. So you can go there or you can speak from here also, no problem.
Good morning, everybody. Thank you for the opportunity given to me as a presenter for this session. And I've heard the very extensive presentations of Nepal market and Japan market from Mr. Poshak and Mr. Ishii. And what I find that it's not a comparison, it's a wide gap between the two markets. One developed market and another position of the developing market. And Mr. Ishii, in his presentation, he had pointed out that there are only 42 companies as against the population of 126 million. Whereas the comparison between Nepal is we have got the 15 companies, there are 19 companies, 20 companies, but now with merger, it has reduced to 15 companies, and the population is 29 million, just to cater the population of 29 million. And the global share of Japanese market as a gather is 9.87 million. It is almost competitive with the European market, and because in UK it is just 9.48 as per the data given by him, and the real GDP is, Japanese real GDP rate is 0.82, and Nepal real GDP 4.2. Increasing number of nuclear family, Japan has now they are growing the insurance development, because they have got the increasing number of nuclear families. Almost I think the joint family has been replaced. And in Nepal also, it is slowly taking place, nuclear family. Nuclear family in society, we might have some disadvantage, but I think, insurance penetration wise, I think it is favorable for insurance penetration. And distribution challenge also, as Posak mentioned it, and also our Japanese friend, Mr. Ishii, almost the same, direct sales, direct agents, and direct sales agents and corporate agents. And we don't have brokers, no broking sales distribution channel in Nepal so far. And life products our product is endowment, but what I gathered that their product, Japanese product is endowment coupled with the term life. They are more protection centric, but whereas we are more, this saving centric. Although our sum insured is very much low, and average it should be about 2 to 5 lakhs rupees only, but still it is a saving. And we don't have term life coupled, very few term life coupled with whole life and endowment. So this is the position between these two countries. And in Nepal, we have GDP of 2.8%, GDP contribution of life insurance, 2.8%. In comparison with other countries, it may sound well, but still it is a meager contribution percentage. And looking at the demography, we have got 54% male and female and 46% male, but still the insurance is concentrated on mostly on the male side only. Females are very, very, very less insured, I should say. So I think this indicates another, opportunity also. And, actually there is a possibility, now immense possibility for us, for the, the micro life insurance side also. There is a possibility. And micro life insurance side, actually, most of the people in Nepal, most of the hands, they have got mobile. And about 68 people has this smartphone in their hands. So we can have a good selling through the mobile phone, and that will be best for the micro insurance. And Mr. Posak very vividly, mentioned about the challenges and opportunities in Nepal. We have got the challenges about economic uncertainty is a very challenge. Huge informal economy is there, and there are, increasing regulations also. He said increasing regulation is also a challenge because you have to cope up with that. and compliances also is a challenge. But equally, on the other hand, it is the opportunity of to develop oneself in a sound manner. And, he has, iterated that it is a captive man. Previously, up till this year, there was a lot of agents scared, around the country. And those agents were free, they are free, to go anywhere. Those agents were free to go with any companies. But now there is a regulation that there should be the captive agents. So I think that this is a very good opportunity. So there will be a dedicated agency to a particular company. So that will increase the, this penetrations. Also, now the companies have the strong base because of the mergers and plus requirement of capital increase. And we have got the huge untapped market. Still, we said our penetration is 42% inclusive of foreign expat, but we have another 90% of the total insurable population. It is a bigger 90% of total insurable population that can be insured. So on the way forward, Mr. Poshak also, highlighted that some of the bank assurance, term life, development of term life product, and production of actuaries in the countries, and also the prompt claim settlement. These are all the inducive factors for the growth of insurance here. But what I feel that both of these papers, they are missing on how to create awareness amongst the people to go for insurance. Maybe in Japan it may not be it might not be that important. And he has said that there have been 3 communication patterns developed in Japan, communicating to the communicating to the whole of the country, communicating to the particular attributes, and communicating with the particular state. So he has thought on that. That is also a very good program, and that will be a good guidance for us also. And this awareness program, our regulators is doing with the local, in the provinces and with the local authorities. But I think it has to go with the mass. Even the insurance companies, their concern is not only but it should be is not only to selling the insurance, but it should be the creating of the awareness also. Because in the long run, the business will come to them. All of the people are aware. So that is one of the challenges there. And moreover, on the capacity development side, since I am in the insurance institute, I am more concerned with the capacity development side. And I think very, very little has been done on the capacity, capacity development and building capacity and development of capacity. Capacity building is not only the process of, strengthening the skills and abilities, but also it is the instinct, creating the instinct of the agents, creating the instinct of the underwriters, instinct of the claimants, for better understanding of what they are doing. Most of the people, they do what they are doing. They just fill up the printed paper. They don't know what is there in the, exclusions, coverage, and others. In this way, some sort of mis-selling is also happening. This sort of things has to be prevented. And the only thing, this mis-selling and this under knowledge is to be removed is by capacity building, by sending the people in training. And training is a never-ending job because you have to, new risks will emerge. So you have to take care of the new risks also. So I think you'll have to get trained maybe train the whole life training. It is a cycle of the whole life. Training is the cycle. So this is what I stress on. Thank you. Thank you, Mr. Chairman.
Thank you, all the speakers and panelists. Now it's time to the audience. I would like to request you to ask your questions. So far I know you are representing the whole life insurance industry. Yeah, I hope you have the representatives of the life insurance company here. So you may ask both of the speakers and as well as the panelists, whatever you want to know from them.
Am I audible? Yeah. Good morning, the panelists. This is Dibesh from Sun Nepal Life Insurance. Yesterday, we spelled one term many a times. That was protection gap. And we also learned that during 2015 earthquake incident, our protection gap was more than 99%. And in today's presentation, while tapping our back that our life insurance presentation has crossed 40%, have we asked one question: are we insured enough? So what are your insights on what would be our protection gap as of now? Are we insured enough? And what is the condition of our neighboring countries? Are they insured enough? As Subramaniam sir also asked, have you taken a life insurance contract? Every one of us said yes. But my question is, have we taken enough? Thank you.
You understand? So you understand? Oh. Okay, then Mr. Actuary will answer the question.
I think you are repeating what I have stated. Why the insurance awareness or insurance education has not taken place in this country. Particularly when I asked you first, how many of you do not have insurance contract? Everybody said yes, rather. So that means insurance penetration is very good from the audience. But still you have observed that insurance penetration is low. Why we have not done to improve the insurance penetration? You are putting a question to the insurance industry, right? So here sitting the president of the Insurers Association, I think you have to answer now. Why the insurance penetration is low?
Insurance penetration is low.
Yeah. So far I understand the question that why insurance penetration is low in our part of the market. Am I correctly understood the question? Here sound is a little bit not audible. Yes, please. Yeah. Yeah. Regarding regulation, are we regulated enough? Yeah. Okay. What is the? Yeah. Our average sum assured is 500,000 local currency. And yes, we are in good respect, we are underinsured. And if we compare with Japan, that average policy taken ratio is 7:1. One person takes 7 policy in Japan. Here, even not even 1 in terms of number of policy. In terms of sum assured and is it enough? In terms of that, we are mostly we are underinsured. And ours, as Subramanian sir already said, that we are policy is being sold, not is bought. That's why if you go to sold, they will try to buy at lower end. That's why there is an apple of opportunity in terms of upselling and selling enough as their requirements. Hope I answered your question.
So next.
Hello. Hi, everyone. My name is Nirajan Kadil, and I work for Sanima Reliance Life Insurance.
Excuse me, if you rise, it would be easier to understand your question.
Yes.
Can I go ahead?
Yeah.
Yeah, my question is to Posakji. So we've talked about diversification in terms of distribution, right? So noticed that Japan has diversification. For example, they have direct channel, digital channel, corporate channel, and all. So if you talk about Nepal, 99% of the businesses that we are soliciting is through agency channels, right? We have micro business and corporate business, but these are contributing very less. So until and unless we have right sort of diversification in terms of sales distribution, I think the right selling will also not happen. So in previous days, we have bank assurance, but this is no more the case. So what we have thought in this regard, how can we diversify sales distribution so that in coming days, we'll have various modes of sales channel. This is one question. And the other question is, in terms of knowledge transfer, I think Nepal is very backward in terms of knowledge transfer in insurance industry. So what we have thought in regard to this? Thank you.
Yes. Regarding distribution diversification, yes, definitely we are predominantly agency channels. And we have seen the Japanese market, developed market, as well as there also it is an individual agency. Yes. And it is a good part that around almost 70% people having a smartphone in Nepal, and the growing young population, then there is a good market that we can go for digital, and the transferring those things in the adopting new digital things might be faster than the other countries. Seeing the demographic advantage. For that, gradually we can develop in the diversifying agency channels to bank assurance and the other digital channels. That is a future, and we can refer from our Indian market as well. And even the Corona stage, they grew a lot, and they earned significant amount of business from the digital channel and the alternative channels. That's why we can learn from the neighboring country, even the Japanese market as well, how they are doing and the best practice. If you can share some lights on that, how distribution channels are being diverse.
As I mentioned in my presentation, people started to have a different values and way of thinking. Some people, but so far, many people want to buy life insurance from the agent, direct agent, but some people doesn't want to agents come to your house somewhere. In that case, they go to the digital market. So based on difference and diversified values, we insurance company provide right way to approach the customer. So it can be diversified, but so far right now, probably Nepalese and Japan are mostly comfortable to buy the insurance from the agent's channel. But it could be changed. But still, we have to, as I said, society is changing. We are looking at the society. What is the right way to access our customers? We have to change by ourselves. So there's no answer which is the best ones and what is the better ones, worst ones. We have to look at the customers. Based on that, we have to react to that one. So far, sales agent. Not sure in the future, but we have to understand the situation.
So one more question. If you,
Just one thing.
you want to,
Good morning to all.
I want to add to his answer. See, his main concern, I think, I think his main concern is why insurance is only sold through agents. What is the difficulty in selling these insurance contracts? So he's expecting there should be ease of selling insurance contracts. Am I correct? Mr. Questioner? You want the ease of selling. Okay. So that products can be sold more. I agree with you. There are so many things in this. It is not only the agents that matter here, because the agents only getting insurance education, they're selling. Many others are not getting that much education to sell the insurance contract. What I could suggest to the insurance industry is, you design a simple products which are of comprehensive nature so that they can understand the silent features of the products with no difficulty. Okay? That propagation is very important. Then even people can straight away buy online also. So in that line, you need to work the entire insurance. Maybe life or non-life. companies, in fact. So ease of selling is the main concern for you. And the insurance education is very important. So if you sell a complicated product, if you design a complicated product, nobody will come and buy. Because first of all, they don't understand when benefits are payable. It becomes very complicated. So what we need to do is design a product which is acceptable to the public and they can easily understand and do that. If you see the whole world, the production policies are very popular because everybody knows on death I will get a sum, my family will get a sum assured, which is easily understood. And such products are very sold very much. This needs to be educated. So you also can sell term insurance products very fast. Even online also, possibility is there. Okay?
So any more question?
Yes, just one question, Subramanian sir. So, what we saw in the first presentation, despite that we have the huge premium growth in our market, and what we saw is that the expense ratio is also in line with the other countries in the similar market for India or other country. But at the same time, what we saw is that the net profit of our company, whether it's the business to the profit or capital to the business, is low compared to the other same market. So what are the main reasons we have in terms of the maybe it's the product pricing, lack of the product proper pricing, or not proper distribution channel? So I want to hear from your experience about why this is the reason why we have the low profit compared to the other country. Thank you very much.
Yes, thank you. Yes, definitely. Yeah, in many respects, we are behind compared to neighboring countries. And, but in some respects, we are ahead of penetration and all many areas as well. In terms of profitability and in terms of other indicators that we are growing market, in the growing phase, some indicators might be lower than the neighboring countries because they started their business long back and their history of insurance is also long. That's why our profitability and other indicators might be lower than the neighboring countries, but seeing the potential market and opportunities and the learning curve of those countries, we can make better profit and the better other indicators in all respects. Hopefully, this seminar also will help in many respects to grow and to make a better strategy for a better future. Thank you.
As I started sometimes late, so I would beg some minutes, 5 minutes to conclude it.
If we could wrap it up in 2 minutes because we have other sessions as well, but
Yeah,
I'll
no.
give it to the
So
moderator.
as a moderator, I have to complete it in time.
Sure.
Okay. Actually, I have
Excuse me,
some
may I
questions,
have one question,
individual
please?
questions too. So, sorry, we have no time more. I have to conclude it in time. So, thank you very much for your questions. And as a moderator, I have some questions to individuals, but I will not ask everybody to go questions. So only one question to Mr. Poshak, as he is the market player, managing director of a life insurance company. At the same time, he is representing the Association of Life Insurance in Nepal. So this conference is based on regulatory involvement. So I want to ask him, as representing, how much is your regulator industry friendly? How for your development of the life insurance market as well as insurance market in Nepal?
Yeah.
It's audible.
If you ask this question, that definitely for other regulators, I don't know. For my regulator, I find very much friendly. Even I will share here that one best practice that we are doing here. For quarterly basis, our Life Insurance Association and regulators sit together. We present in front of them that these are the issues that we are facing, and that these are the challenges, these are the opportunity that we are industry is facing, and how we can better off the industry, and those issues we put together in front of them. They definitely, I have not heard this kind of practice in other part of the world, other part of the neighboring countries even. And then after that, we submit those feedbacks to regulator, and regulator took proactive actions. These are the best practice we are doing. This is one example that I'm sharing here in front of all of you, that considering this is the one example. There are many examples that we have practiced considering that. And I got an opportunity to discuss with Mr. Subramaniam also. He also shared that, yes, for developing industry and this level of growth, definitely regulator is too friendly comparatively with nearby countries. I hope so. Thank you.
So thank you, all the panelists and the speakers and audience to give me time to finish it. And I am grateful to Nepal Insurance Authority to invite me as the panelist here and give me the opportunity to moderate this session. Thank you all.
Thank you very much. It's always encouraging that we get a lot of questions from the floor, but we'd also like to remind you that we still have tea break and the closing ceremony, and all our panelists and speakers will be here. So if in case you do have some more questions that were unanswered, you can definitely contact our moderator, our panelists, our presenters, and definitely ask them the question personally as well. But for now, I think Mr. Yoshisha also has a token of appreciation that he wants to present to all of the panelists, the moderator, and also to our chairman. So I'd like to request Mr. Surya Prasad Silwan, Chairman of Nepal Insurance Authority, to kindly join us on stage. Mr. Ishi from the Foundation of the Advancement of Life and Insurance Around the World would like to present a small token of appreciation to the Chairman of Nepal Insurance Authority and to all our speakers, moderators, and presenters of this session. To you. For a change, I think our Chairman is on the receiving end this morning. And we'd also like to invite our moderator, Mr. Sultan, to kindly come forward and accept this token of appreciation. Mr. Subramaniam Kulimarla, Consultant Actuary, Nepal Insurance Authority. Mr. Bojraj Sharma, Chairman, Insurance Institute of Nepal. And Mr. Poshak Raj Paurel, CEO, Citizen Life Insurance Company Limited. And we'd also now like to present the token of appreciation from the organizers' side, from Nepal Insurance Authority. We'd like to thank our moderator, Mr. Sultan. We'd like to request you to kindly come forward and this token of appreciation. To present this token of appreciation, may I please request Mr. Surya Prasad Silwan, Chairman, Nepal Insurance Authority. We'd also like to thank our presenters, Mr. Poshak Raj Paurel, President, Jivan Bimak Sangh, Nepal. We'd also like to thank Mr. Ishi from the Foundation for the Advancement of Life and Insurance Around the World. We'd also like to thank Mr. Subramaniam for your valuable insights in this session of life insurance market practices, opportunities, and challenge. And we'd also like to thank Mr. Bojraj Sharma, Chairman of Insurance Institute of Nepal. We'd like to request him to kindly accept this token of appreciation from the organizer's side as well. Now, a group photograph, ladies and gentlemen, to end the first session here at the third day of Asian Insurance Meet 2023. We concluded the first session, Life Insurance Markets, Practices, Opportunities and Challenges.
Okay, good morning once again to all our participants. And yes, I'd like to thank again the organizers for giving me this second speaking session. And this time, I would like to present to you a topic of growing importance, which is diversity, equity, and inclusivity, and how it affects, of course, right now, regulators, supervisors, and the insurance industry itself. The presentation on DEI will eventually lead to a toolkit, which we call the Data Disaggregated Toolkit. Actually, to explain more of that, we'll be having a recorded presentation by my colleague, Ms. Melena Cosomara. And I would like to start off now by giving you a background on how this came to be. So we're talking of diversity, equity, and inclusion, or what we call DEI. Now, in 2021, the IAIS actually, in recognition of the value of DEI, included it as one of its key strategic themes for 2021. So basically, DEI, this is what you could refer to this as policies, programs, and guidelines, actually, that promote the participation and inclusion of individual groups to ensure fairness and equity, whether be it in organization or society. Okay, so when we're talking of DEI, we're talking of individual groups which could be classified into gender, age, disabilities, okay, age, okay, and a lot of other categorized groups. Okay. Now, actually, these are three different but highly interlinked concepts, which is very important right now if we are to ensure fair participation and representation, of course, of the individual groups in organizations and societies, including, of course, in insurance. Okay. And in 2022, based on a stock survey undertaken by IAIS, these following benefits actually came up, which showed the importance of integrating DEI into the operations of supervisors and insurers as well, and basically in any other organization. Okay, first of all is by embedding DEI in an organization's operations and culture, it encourages greater innovation that leads to better customer outcomes. I think this is self-explanatory, since by considering, of course, the needs of each individual group, a proper decision could be decided, which could lead to fairness, of course, in the company or the organization itself. It reduces misconduct by promoting a strong culture where all employees are valued and get a sense of belonging and appreciation. And finally, DEI-driven leadership at insurers and other organizations improve their corporate governance and risk management by reducing the risk of what we call groupthink. Just to elaborate further, groupthink in the simplest sense would be when a certain group, let's say the board or the management, actually, just for the purpose of reaching the decision, will agree to come with one decision without considering various factors involved in coming up with such decision. So it actually, in groupthink actually discourages proper thinking, proper consideration of various factors, especially when we're talking about DEI. And as mentioned already, with DEI at the leadership, this risk of groupthink is actually reduced. So companies tend to come up with proper strategies, directions, and policies that, of course, encourage a sense of fair participation for all individual groups. Now, as far as insurance is concerned, actually, the first step that we're taking is, of course, in the area of gender equity. Okay, so actually, as far as the women's market opportunity for insurance, there is a very, very big opportunity, as it will represent actually a 1.45 to 1.7 trillion market by 2030. So it's a very, very huge market that could be tapped, okay, by the insurance industry, okay, the women's market. And any increase in the GDP due to the implementation of the AI leading to gender parity could actually translate into an additional, please take note, additional 2.1 trillion in global insurance premiums in 2029. I think below you could see the various areas where this growth is projected, like in life insurance, health insurance, and non-life insurance, particularly for the women's market. So it is a very, very big market that could be tapped. However, at the moment, let's try to put it in perspective. Well, women actually make up only 23% of RE insurance company, RE and insurance company executives, just 10% of CEOs and 8% of board chairs globally in a survey done in 2019. So it's a rather small percentage. The representation is there, but there could still be growth for improvement. And actually, during this recent pandemic, and I think a lot of you will agree with this one, women carry the bigger brunt of the socioeconomic fallout brought about by COVID-19. Okay. Actually, there are several studies that show that women were most likely to lose their jobs compared to men during the pandemic. Okay. And add to this, well, women have a multitasking role to play, okay, including caregiving at home, especially during the pandemic. Okay. And with the lockdown, well, income that was supposed to be earned was not earned. Okay, so it was really a big, let's say, women really carried a big burden, okay, of the brunt during the pandemic. Okay. As far as climate change is concerned, actually women are sorry, I'm having difficulty with this word, disproportionately, okay, they carry a higher quantum of negative impacts of climate change. Let's put this just to give you an example. Actually, in a lot of parts of the world, women are more involved, let's say, in agriculture. And given that they do the work still in the fields, okay, they practically have little time for themselves. Okay, and actually, in even the securing relief during climate disaster events, women actually receive less or tend to receive less compared to men. So given all of this, actually, we could see that there is some disparity. Okay? So the question of how far really are women compared to men in accessing insurance follows. All right. Okay. Right now, actually, in terms of gender disaggregated data, there is a lack or absence of it. Okay, so if we do not know data specifically pertaining to women, then how can we know? This, of course, is very important for you in terms of insurance products. What products and services do women value or need? Women, of course, will have different needs. And this will have to address, but without any data to support this, it will be difficult in terms of designing and coming up with important products and services catered to them. Okay. Women have probably different distribution channels that they would like to access, okay? Especially in the case of working women or those in the rural areas. They would have a preference, of course, for certain distribution channels like self-help groups or MFIs. Other distribution channels might not be accessed, okay, or not preferred by women. And without the data to support this, again, this proves some kind of difficulty. And are there challenges facing women when it comes to claims in insurance? These we have to know, okay? And a lot of women actually, as part of their caregiving function, do so, in the Philippines, we call it sideline, okay? A lot of them are informed in the informal sector. And in this case, the women entrepreneurs face more difficulty in accessing insurance for their businesses, especially given the informal nature of their, let's say, their jobs or their employment. And it showed that at the moment, really, there is still no comprehensive data that exists on women's access to insurance, be it on the demand or the supply side. Excuse me. In Microinsurance Network's landscape survey in 2021, it showed that more than half of products and providers didn't collect data on women. And there are certain challenges actually in collecting gender disaggregated data, given the definitions and also how insurers collect data. The digital channels actually don't collect such data, and related to that is because there are concerns on customer privacy. So it's really hard to get disaggregated data given the challenges that I mentioned a while ago. And right now on the screen, you will find that there are actually other constraints to insurance access, more specific, let's say, based on the study done by A2II on this one. In some parts of the world, like in sub-Saharan Africa, actually women are 9% less likely to have ID or identification cards. This is probably due to social norms existing in the said area. In some parts of the world, actually, before women can have identification cards, there has to be some sort of an assurance or a countersign by men for them to get their identification cards, which are important actually if we're talking about access to insurance or getting insurance. There's the digital gap and gender wherein, as far as mobile phones are concerned, okay, smart and mobile phones, there is an 8% chance that women are less likely to have a mobile phone and 20% less likely to be accessing mobile internet over a smartphone, which could probably be attributed to, let's say, expenses. Okay? And of course, given their roles as multitasking caregivers, sometimes they do not have the time anymore. Okay? Social cultural constraints. Women face barriers in many societies while accessing insurance agents, other sales and service points, and sources of information as they tend to be male-dominated. Let's face it, I mean, there are times, of course, that women are more comfortable when dealing, of course, with other people of their same gender, okay? And as mentioned a while ago, given the current status of women right now, they prefer some distribution channels which actually may not be accessible to them, okay? Like having female agents or distribution channels, or if they really could not leave their residences that far, they would rather prefer to go to one that is near them, like self-help groups, which provide education and even access to insurance. Already cited a while ago, in terms of representation, women actually made up only 23% of RE and insurance companies executives, 10% of CEOs, and 8% of board chairs globally in 2019. And as I already mentioned also a while ago, women face disproportionate impacts of climate change. So these are some of the constraints that actually prevent women from getting access to insurance. And as shown the early slides actually, there is indeed a big market, a growing market for women, which could be addressed if such issues actually are sorry for the word, if such issues are actually addressed. Right now, we are actually more into a gender-neutral society, and this should be brought into the gender-aware stage already. In terms of the insurance actually, regulations tend to be gender-neutral. This is unintentional, definitely, but it would be good if insurance regulations could be more, let's say, moved to address certain gender-specific needs or constraints in order to provide women fair participation and access to insurance. Biologically, women have unique risks compared to men, okay, in terms of health, life cycle needs, and etc. Okay, so gender-neutral products actually may not need these unique needs. Okay, I think it's everybody knows, but biologically, the difference is already there. Okay, even in terms of let's say disease, sickness, or certain stage of life. The needs of women, particularly, are different from men. Climate and disaster risk have also a gender impact, as already mentioned, and therefore there's a need to analyze gender-aware data to understand those risks and impacts and be able to come up with measures to address them. And in this particular case, actually, given the scenario, the IAIS plans to initiate work aimed at helping supervisors to further understand the benefits of DEI, the connection between promoting DEI and their supervisory mandates, and the range of available supervisory practices to promote DEI. Actually, this has started already, okay? And we would be very glad to show you that later on. Now, given all of the things that I've already mentioned regarding, let's say, the gender issue, we at A22I have all, given that we're working closely with IAIS, we already started gender mainstreaming at A2II. And our statement of intent, as far as this is concerned, is that A2II seeks to inspire regulators, okay, capacitate them, to support financial inclusion of women by facilitating more accessible markets and promoting women's representation in the industry. In this particular matrix, you would see that there are the key questions, needs that need to be addressed, and at the moment, what tools or frameworks we have in order to address them. Okay. So why do we go into gender mainstreaming? You could see already from our statement of intent the reason why. Okay. What information is needed? Actually, it's nice to come up with the boilerplate templates. Boilerplate templates are actually standardized documents which could actually stand the test of time. It could be edited without changing the context actually of the original intent. Okay? And as far as knowledge, advocacy, and capacity building is concerned, how do we ensure that we could include or integrate the women's aspect or the gender aspect? We have actually a checklist which you could refer to in order to find out how to include and integrate them into the areas that I already mentioned. Okay? And how do regulators, supervisors know where they are to begin, okay, or where to start? Okay? We could actually, there is a rapid gender assessment kit that we have, and this could guide you in finding out where you stand as insurance regulators, supervisors, or as insurers themselves, where you stand as far as gender mainstreaming is concerned. Okay? And then with the results of this one, with your analysis and further processing, gender mainstreaming models for inclusive and inclusive insurance supervision and regulation could be done. And finally, how can we support the regulators using these tools? As I mentioned, the rapid assessment tool could tell you where you stand, and from there you could come up with your own support strategies towards gender mainstreaming, and a boilerplate template can shape the training content. Okay? You need to capacitate, of course, your institution and the people in order to further the issue of gender mainstreaming in your prospective organizations and in the insurance industry as well. Actually, we have a gender maturity tool and model, which, as you could see, actually, will show you actually the various stages of gender maturity, which is classified as foundational or the basic, intermediate, and advanced. Actually, this presents more of a guiding vision of the various stages of gender mainstreaming and the actions to more, let's say, and to be able to move you from a foundational hopefully to an advanced stage. Okay, so this is basically what will happen if you do a rapid assessment. You will find out, and actually through this tool, you could move from one stage and hopefully to the highest stage, which will show that you are already a gender-sensitive organization.
Hello everyone, it is a pleasure to be here today with you, even though I'm only on the screen. My name is So who should use this tool? The tool is designed.
So at this point, as I mentioned a while ago, we have a maturity toolkit, and actually we were able to come up with another kit called the 8OI FEMA meter. Okay, this was primarily developed for the issue of DEI and gender mainstreaming. And unfortunately, my colleague, Ms. Milena Cosamara, could not come, but she did do a recording to explain to you what this FEMA meter is all about and what it could do to all of you as regulators and insurers. Okay? So without further ado, I'd like to say good morning to Milena. I hope she answers back, and I'll be playing the recording now.
Hello everyone, it is a pleasure to be here today with you, even though I'm only on the screen. My name is Milena and I work as an advisor at Access to Insurance Initiative. My colleagues have already talked about challenges of not having gender and sex disaggregated data, and at A2II we wanted to help overcome this challenge, and we created a tool that we called FEMA meter that helps primarily regulators and supervisors to disaggregate among 13 key insurance metrics by sex. So the tool disaggregates on female and male, but it can also be used by insurance companies. These metrics that are included in the tool measure the gender balance in insurance across market development. For this, we have 7 metrics under access and usage, and there are 6 metrics under organizational diversity. So the tool also looks at the governance side, and you will see these later in slides. The tool itself is a simple Microsoft Excel-based tool where much of the calculation is done in the background of it, so it is already included in the tool, and it can provide immediate and simple output calculations that compare differences across various indicators between men and women. This creates opportunities to develop new insights, to challenge prevalent assumptions, and to identify areas for further analysis. So who should use this tool? The tool is designed to be used by 2 different groups, insurance companies on one side, and insurance regulators, supervisors, and policymakers that decide to use it on the other side. The tool itself comes with 4 different templates, and then 2 are for insurance companies and 2 are for regulators. I've already mentioned that the tool captures indicators across 2 categories, insurance access and usage, and then organizational diversity. So insurance companies use 2 templates to enter high-level portfolio data disaggregated by sex, and then they share with their regulators, and then regulators on their side collect the templates from insurance companies, and they combine them in their own templates that are also provided in the tool. So let's now look at some of the advantages of the tool. I already mentioned that it's a simple Microsoft Excel-based tool that is widely accessible and used by almost everyone. The tool itself is simple and contains simple and most common indicators, which are usually readily available, so no massive data collection is needed for the tool. It is quick and easy to fill and compile. For example, on the insurance company side, they will be able to fill in their templates in less than 30 minutes once they have the data. For regulators and supervisors on the other side, the tool has featured to allow them to combine multiple Excel sheets that they receive from more than one insurer into one single template in just a few clicks, and there's no manual data entry. On average, we estimate that regulators need about 1 minute per Excel sheet, so half an hour maximum for responses received from 30 insurance companies. And then the tool provides immediate outputs to both insurance companies as well as regulators and supervisors. I already mentioned that FEMA meter measures gender balance across two categories, access and usage on one side and organizational diversity on the other side. Here you can see which indicators the toolkit is going to capture. On the access and usage side, it is going to be done at the portfolio level, and you can see portfolios, 4 portfolios that we included in the tool, and then what are the plan input and output indicators. Also, you can see on organizational diversity side or on the governance side, what are the levels and input and output indicators that will be captured. The idea is that on the governance side, data is collected for the last 12 months, and on the access and usage side, it would have to be specified by the user what is going to be the duration for which they want to collect the data. Now we're looking at what to expect from FEMA meter. It can provide understanding where sex disaggregated information is incomplete or missing. It can provide quick and simple calculations based on data entered, calculations such as ratios, percentages, averages, and then supervisors and regulators can have the opportunity to understand the broader market. However, the FEMA meter cannot perform any kind of actuarial analysis. It cannot provide interpretation of the numbers or indicators. It cannot be used for comparisons with other insurance companies or other countries. The tool itself cannot provide any strategic guidance, and then of course it cannot replace the human element of generating insight based on the local knowledge and context. So where are we with the tool and what are we planning to do with it? In next few months, we're planning to test and pilot the tool with 2 to 3 supervisory institutions from different countries. And then based on the feedback we receive from those early users, we will finalize the tool and make it available to all supervisors that are interested in using the tool and collecting data in their jurisdictions. During the testing and piloting phase, we will have constant support and backup for those supervisors that decide to test it and use it. So if your supervisory institution is interested in piloting this tool, I would kindly ask you to get in touch with me or my colleagues that are here with you today. Thank you very much.
Okay. Thank you very much, Milena, for that. Well, as you could see, it's a very simple toolkit, which is designed, as it says, to disaggregate data for further use of both insurers and the regulators and supervisors. Okay. In the case of insurers, for them to find out, okay, that this data could provide them some important inputs, which could help them actually in developing and designing products catering to women. And on the part of supervisors, they could give the broader picture to enable them to find out where it stands and come up with, let's say, a more enabling framework where gender mainstreaming is, of course, considered. Okay, so it's actually very simple. It's an Excel toolkit. It's very easy to fill up. Okay, and it could provide you with really good information, which you could use actually in the things that I already mentioned a while ago. Okay. As far as our tools and resources dedicated, of course, to DEI and gender mainstreaming, right now, as far as knowledge generation is concerned, we have, for example, various reports and publications concerning the role of insurance regulation in promoting inclusive insurance for women in English, Spanish, and French. So actually, take your pick, whatever you're more comfortable with. Okay. We have also a publication on the role of insurance supervisor in boosting women's financial inclusion, also in various languages. And there are also blogs pertaining, of course, to the status of women's access to insurance, which you might find very interesting. As far as capacity building and peer exchange is concerned, actually, we have done actually a lot on this area, and these are some of them. Okay. We have the A2IIS Public Dialogue for Women's Access to Insurance. We have the, I mentioned a while ago, the Gender Maturity Assessment and Rapid Gender Diversity Assessment Tool. We have gender training modules and case studies concerning how to integrate women further as far as insurance is concerned. Okay. As you know, we support the SDGs, and particular SDG 5, which refers to gender equality. And we also have a gender audit and mainstreaming exercise within A2II Secretariat team and our operations. Okay. Just to continue, basically, we have a toolkit to collect the sex disaggregated data, the one you just witnessed a while ago, which is the FEMA meter. Okay. We're coming up with a report on the use and experience with the FEMA meter toolkit, and also a blog on gender data usage for bridging the protection gap. Okay. Actually, this particular FEMA meter has been shown in various events already. We have done this particularly in Latin America through the network of ASAL, and a lot of interest already has been shown regarding this particular toolkit, which they find useful. Okay. And we also have a Women's World Banking Scholars Alumni Peer Working Group planned up in the fourth quarter of 2023. Okay. So these are some of the, just to show you what resources we have at A2II, including the FEMA meter. Okay. And before I end or close my presentation, I'd just like to get back to a certain portion, which is the next steps that we plan to take. Okay, as Milena mentioned, we already have the toolkit, and what we plan to do actually is to roll it out soon. And for this, we need to identify 2 to 3 pilot countries. Okay, we are talking of countries. So this could be regulators, supervisors, or insurers themselves. Okay, there is already interest shown. Okay. And we would like to invite you, if you're interested, to contact us if you want to be part, let's say, of the pilot group. As I mentioned a while ago, Latin America has shown interest, and other jurisdictions have shown interest. We would like to include Asia, of course, to give it a more global context. And we would really like to find out, okay, and to work with Asia, as shown in this particular event. Okay. If there's anyone who would like to show interest or has the interest, of course, in the FEMA meter, I would still be here today. You could just approach me, or you could write us at A2II, and we will immediately get back to you. Okay. From there, actually, there will be the testing and the pilot toolkit where you will be guided, okay, in using the FEMA meter. Okay. And from the experiences that we had in the pilot phase, then the FEMA meter toolkit will, of course, be finalized and refined, and then a manual or a training, actually, for regulators and insurers on the tool will be developed, okay, and it will be rolled out as soon as we have all of this. But we need, of course, inputs from the target users of the FEMA meter. And as I mentioned, we will be more than happy to have Asian supervisors and insurers on board. Feel free to approach us or to write us, and if there are any questions, actually, we would be happy to answer them, or we might even make it possible to come up with some sort of a meeting should you have some specific details or concerns regarding the use of the FEMA meter. So with that, I'm closing my presentation, and if there are any questions, which hopefully I could answer, I would be more than glad to do so. Thank you very much.
Are there any questions for this particular panel? For Mr. Ronaldo, if you have any questions, I think he really highlighted some very interesting and important points, like how can we be gender aware from gender neutral. These look like some great tools and kits for regulators, for insurers themselves as well. So if you'd like to ask him any questions, know more about it, this is your opportunity. But we are also, I'd like to inform that we're also heading towards a tea break after this. So if you'd like to catch Mr. Ronaldo personally and ask him the question, that would also be all right.
So thank you very much for your attention.
Thank you very much, Mr. Ronaldo. He shedded light on diversity, equity, and inclusivity. Again, if there are any questions, Mr. Ronaldo is here during the tea break as well, and we really encourage all the regulators from the different organizations, different countries, insurers, reinsurers, brokerage firms who have joined us today to kindly definitely include diversity, inclusivity, equity in their programs as well. And I think some fantastic points. So thanking Mr. Ronaldo very much for this presentation. We are now heading towards a tea break, ladies and gentlemen. So we are going to have a tea break for 20 minutes, and then we hope to see you back after that for our third session, which is going to be on risk-based supervision frameworks, important dimensions and areas to focus on. I'm sure that this would also be really insightful and knowledgeable. So we hope to see you all in 20 minutes in this hall. The tea break is right behind this hall at the Regency Ballroom. Thank you very much. Good morning, ladies and gentlemen, and we'd like to welcome all of you back into the hall from the Regency Ballroom as we are all set for our third and final session. So requesting all of you to kindly come in. We'll begin in 2 minutes. And to all our distinguished guests who've already joined us inside the hall and are still networking, as this is the last day, I believe, of Asian Insurance Meet, I'd please like to request all of you to kindly take your seats. Ladies and gentlemen, we begin in the next 2 minutes. Fun fact about the bell is that we use it when we worship it early in the morning as well. We make sure that the god and goddesses that we worship also wake up to the sound of the bell and then come to the room where we're actually worshiping them. So we'd like to request all of you to also come to this room where we're about to have our third session, our third and final session, ladies and gentlemen. Thank you. Even on a Saturday, we are delighted and very happy to see such a large number of participation. People participate in the last day of Asian Insurance Meet 2023. We really hope and believe that day 1 and day 2 were really fruitful, knowledgeable, and insightful. We started session 1 and session 2 today also talking about life insurance market, what are some of the challenges, opportunities, and practices all around the world as well. Our second session, we highlighted diversity, equity, and inclusivity, which is very important, need of the hour, as they say. And now we're moving forward to risk-based supervision framework. We're talking about important dimensions and areas to focus. And then we will also talk about Nepal's initiative in this third and final session for the third and final day of Asian Insurance Meet 2023. So ladies and gentlemen, once again requesting all of you to settle down. May I now please invite on stage Mr. Sangana Geji, insurance expert from India. He'll be talking about the risk-based supervision framework, important dimensions and areas to focus.
Good afternoon, ladies and gentlemen. It is a privilege to be with you today, for which I would like to express my gratitude to the Nepal Insurance Authority. In the time slot, I would like to cover 2 important areas of RBC. There may be passing references to other components of RBC. RBC supervision framework, I split that into 5 components, analyzed all the components, studied their nature, their role, and the interrelationship amongst them, and wrote a comprehensive write-up on all these things, which in fact I have shared with the authority. That must have been shared with you people. Now, the presentation also covers the same area in maybe slightly different language. Only one slide I would like to show in the beginning. Just to highlight the importance of See, this is other slides, I'll later on go through that. All of you know RBC is connected with financial health of organizations, particularly insurance and banking. And recently, we also know about what happened in US, the failure of certain banks. And now these are the contents of the report which Federal Reserve has come out giving the reasons for the failure of that bank, Silicon Valley Bank, and another two banks. Why I am showing this is the two important issues I am talking to you is, in fact, the same thing is recorded here in a different language. The importance of the two things I will be covering while talking the topic, but coincidentally, what this says is these two areas are very important. And those two areas are, I have given a name like quantification of risks, and another one is capacity building. So risks were not properly quantified. That was the reason for the failure. And probably capacity was lacking somewhere. That was the reason for failure. This is what is contained in this. So for next few minutes, I'll try to give an idea of these two things. But at the same time, if you get a chance, please go through that write-up. It has come out very nicely, and it will give you a very clear idea of what RBC is there. I'm telling this because not I have written it, but it has really come very nicely. Now, when I say quantification of risks, how I am going to put it before you? I'll be sharing my experience in quantifying the risks. Assume for a moment you are on the board of an insurance company, and I will present you one statement, an Excel printout with 15-20 rows, 7-8 columns. In the rows, I am listing out different items. In the columns, I am giving you different types of risks to which these items are exposed. And I am giving you, these are the amounts of the risks. For example, for simplification, you take in the total column 500 crores for each item. If there are 10 items, 5,000 crore will be the total quantity of risk. When you see this, you feel, yes, it appears to be good. But next moment, there will be a question, why should I believe this? Whatever statement you have prepared and given, why I should accept that there is a total risk of 5,000 crores here? Because RBC says your capital should be more than the amount of the risk that the organization is exposed to. So now I explain that this statement is based on facts and a systematic method of working by which I have arrived at these figures. So now you will be interested in knowing what are these facts and what are your methods and what is the system that you have followed to arrive at this. So this is what I am going to explain in the next few minutes with the help of my own experience. Why? Or my own experiment. It was some kind of an experiment. Why I call it as an experiment is, in India, we have not yet switched over to the RBC regime. We are continuing in the old regime. Maybe in a short period of time, we also may shift over. So there were no regulations relating to RBC. There were no guidelines. There were no prescriptions. So I had to do all the things on my own. About 6 or 8 months back, I was also not very, very comfortable with my understanding of RBC. So one day it struck me that unless you actually work out the risk-based capital of a company, you will never come to know clearly about the RBC. Then immediately I started, yes, I should do this. By default, I selected the New India Assurance Company. I thought, yes, I'll prepare the RBC requirement of this company. It was my own organization, and plus more important thing was, there is no better representative of an insurer than the New India Assurance. It has global operations, huge amount of investments, 100 years of experience, exposed to all kinds of risks. So, and more important is, I was knowing their financial statements thoroughly well, because for some times I had prepared the financial statements of New India. So for my experiment also, that was a good base for me. Then what I did was, initially I tried to find out what is the market risk, what is the currency risk, what is the insurance risks. Somehow I was not comfortable, then I started slightly in a different manner. If you see the financial statements of any organization, there are assets, there are liabilities, there is an income statement. Everywhere there are risks. So then I started one by one from all the assets. I kept the financial statements as a reference point. Then I started analyzing, take the first asset, what type of risks it is exposed to, and can I quantify it? Take next asset, then come to the liabilities. So what are the liabilities? Whether they are exposed to some kind of risk, and then can I quantify those risks? Then I went to the income statement. I saw different items. Then what kind of risks these items are exposed to? Then I tried to quantify the risk involved in those. Then there is also one more category, which is called as off-balance sheet items. Then, because these things will become part of future balance sheet or future income statement, these off-balance sheet items. Then I tried to work out or quantify the risks for off-balance sheet items. Then I prepared this kind of a statement. So in the given time, I will not be able to explain you all the items, but important items, representative, I will explain you. In other cases, more or less, a similar method is going to be followed. Now let me start with, New India has huge investments, 25,000 crores rupees, 30,000 crores rupees. And investments are not of one or two types. There are different kinds of investments. There are government securities investment, there are corporate bonds investments, there are equity share investments. So now, if you take the example of equity shares, how do I quantify the risk involved in the equity share? For this, what I did, equity shares are traded in the market. So all assets which are traded in the market will have to follow this method. So what I did was, I studied the behavior of India's stock market for last 20 years. In the last 20 years, there were two occasions where the stock market had fallen by more than 50%. In 2008, the mortgage crisis, and in 2019 because of coronavirus. So in all other cases, there was fall, sometimes rise. It was varying, but these were the worst crisis, worst fall in the stock market. In 2008 also, when it had ended, the crisis had ended, some people must have thought, this was the worst period, it will not happen in future. Some people must have thought. But again in 19 it happened with equal seriousness. So today also we should think, yes, in future also this can happen. In future, the collapse can be either less than this or it can be little more than this also. If it is less than this, I am safe because I am taking care up to this at least. If it is more than that, yes, I have taken care up to this, the balance is comparatively lesser, which I may be able to withstand. So now if I have 25,000 crores investment, there is a possibility that my investment in a certain period, maybe period of 6 months or 1 year, it can become 12,000 crores. So what is the risk involved in my equity investment is 50% of 25,000 crores. So 12,000 is the quantity of risk involved. This is the amount of risk, how I quantified it. Now, there are investments, because New India has a global operations, there are some investments which are abroad. Equity investment may be less, other investments may be more. But those investments which are abroad, apart from this market risk, they also have a currency risk. Foreign exchange rate going up and down. For which what I did, I again studied 20 years of rate fluctuations in the exchange rate. I found the worst fall was around 8%. And coincidentally, probably even Nepal regulations also prescribe around 8% as the currency risk. So now there is a possibility of 8% risk involved in my investments abroad because of the currency fluctuations. Then there is also something called as concentration risk. If you are investing only in selected groups, your investments are not spread out properly, then there is a risk. But we have investment regulations which do not allow concentration of risk. So when they are not allowing the concentration of risks, either there is no concentration risk, or even if it is there, it is very small. So this is another risk. So if you take one item, yes, these are the risks involved. I took investments, in fact, I again bifurcated them into different categories. I set a column for market risk, column for currency risk, column for concentration risk. Then I added, so the total risk involved in this category of asset is this much. If you take government securities, normally government security, in case of government securities, normally it is said there is no question of any default from the government. But now we have to question this. If you see the condition of Pakistan, if you see the condition of Sri Lanka, where they are finding it difficult to pay back the money to the concerned persons. Ultimately, they may pay, but at the same time, there is a cost involved. You are asking for postponing. So if I need money, I have to arrange it from somewhere. So for which I will involve the cost. So that cost becomes a part of this quantity of risk involved. Similarly, another category of asset is if these securities are one of the reasons for the failure of SVB, immediate reason. It is not the proximate cause or ultimate cause as we talk. The immediate reason was increase in the rate by the Federal Reserve. That is the immediate reason. So what happened when rate increased, the market value of bonds fell down considerably. They are inversely related. So now I also found out, at least in India, Reserve Bank of India decides that rate. So what is the rate change in the last so many years, how the Reserve Bank of India has changed, what could be the highest change? Based on that highest change, I calculated the market risks in bonds. So these are the methods which I followed as far as investments are concerned. In case of corporate bonds, I had a problem. What should be the base? Whatever I had studied about RBC, the base for corporate bonds was rating by the rating agencies. In US also, earlier they had 6 ratings, now there are 21 ratings which they are following. So I had no idea of these ratings, that information was not available with me. Then what I did in my experiments, I took whatever factors, whatever charges they have decided there, the same charges I used and calculated the quantum of risks. Wherever I don't have local details, so what I did was I took the details from other countries which are there. Based on that, I calculated the risk. So this is how I worked out. In this, one of the important thing is insurance risk. How to calculate the insurance risk. So what I did, I studied the performance of insurance for last 10 years. What is the basis of your study? The study's basis is combined ratio. So I found out in 1 year the combined ratio had negatively grown by 16%. So in the last 10 years, the worst development in the combined ratio is 16%. In future also it can happen. So at least I must make a provision for 16% as a risk involved in the insurance risk. In case of insurance risks, actually we should separate reinsurance risks separately we should calculate, accepted direct business separately we should calculate, because in one there may be positive performance, in another there may be negative performance. They may compensate and conceal the risk involved. So you have to split them properly. It applies to many things. And there are multiple. In case of insurance, even risk can be analyzed as underwriting risk, pricing risk, reserving risk. There are different things. In case of life insurance, your mortality risks, morbidity risks, lapse risks, you are separately analyzing. Wherever you are analyzing in a multiple way, one method will be part of your calculations. Other method will be, they are only memorandum statements for your understanding of the risk. Because proper understanding of the risk is very important. Why capacity building is important is, mere knowledge is not sufficient for monitoring the performance. What is important is wisdom. Wisdom comes by experience. You are dealing with factors which are dynamic. Constantly, continuously, unless you are watching those factors, you will not be able to form judgment. Suppose you are out of touch with the topic for 6 months and suddenly you want to come and take a decision on that. No, you will not be able to do. You will have to continuously monitor those things. This requires, what I said, is capacity building. You need some people who can continuously and constantly keep in touch with these things, developments in the market, developments in the economy, developments globally. Unless this, that is why it is extremely important. Capacity building is extremely important. So, this is how, keeping the financial statements as a base, going through item-wise, then working out the risks involved in different kinds of things, and then calculating the total amount of risks. So ultimately what happened, when I calculated the total amount of risk involved with some more steps of RBC, what I found was the amount of capital required under RBC by New India Assurance was almost same as now it is already under the old system. So there was no additional burden. So suddenly we should not think that there will be additional burden because of RBC. There may be burden whose risks are more. There may be release of capital whose risks are comparatively less. So unless you do the exercise, please don't take any judgment on this. There was also a point where, what is the compliance burden of this? Sir, the compliance burden of this, in the first year there will be some burden. You will have to do a very good job. Next year onwards, it is only an incremental burden. So last year I made this mistake, this year I am going to improve this mistake. So second year onwards, according to me, there is not going to be any serious compliance burden. So two things. In short, what I have done, I have highlighted the importance of properly assessing the risk. I called it as quantitative, quantifying the risks. You call it by some other name, definitely no problem. And for telling you the importance also, I have explained, plus I have given you a proof of why it is important. These are my few views on this. I think the time is up. So I should wind up now, and in the question session, so I'll again participate if any questions are there. So briefly, I have put before you what are the important issues of RBC. Thank you, sir.
Thank you very much, Mr. Ageji, for highlighting the important dimensions and areas to focus. He will definitely join us back on stage for the Q&A. For now, we'd like to thank him and invite on stage Ms. Preksha Mathema, Consultant Actuary of Nepal Insurance Authority. She'll be talking about Nepal's initiative when it comes to risk-based supervision framework. Ladies and gentlemen, we would like to remind you that after her session, after her presentation, the floor will be open for Q&A. So in case you have any question and answer, please make sure that you participate. Thank you.
Namaste. Good afternoon to everyone. So today I'm really delighted to be standing here trying to talk to you about some of the initiative we have taken on risk-based supervision. As a team in NIA, we have made a lot of progress on risk-based supervision over the last year. And first, I would like to start off with what has been our journey so far, and then to touch upon the key elements of risk-based capital. That's our version of risk-based capital, own risk and solvency assessment, risk-based supervision, and climate risk disclosures. And then I will talk about the challenges that both the insurers and the regulator are currently facing to implement our, whether it's RBC, RBS, or ORSA within the required time frame. But I also want to highlight the positive changes that can bring if we do adopt this new approach. So regarding our journey, following the aftermath of 2015 earthquake, NIA started engaging with World Bank team for technical assistance to implement risk-based supervision. In 2019, then we issued risk management guidelines to the industry. Things didn't pick up as much because of COVID during that time. And it was during mid-2021 when we truly started working on RBC with World Bank. And in February 2022, directives on RBC and climate risk disclosure was issued to the industry. And what that directive required was companies needed to comply with risk-based capital by July 2024 with, so that's a partial implementation, and with the full implementation of July 2027. And in conjunction with RBC, we were also working on ORSA, and in earlier part of this year, we issued ORSA directive to the industry, which required companies, the selected companies to perform ORSA calculation so that by March 2025, the first ORSA supervisory report had to be submitted to NIA, and it's actually based on the July 2024 RBC numbers. We also engaged with World Bank on a risk-informed pricing. So this is for flood risk, and the idea is that's going to be incorporated within the tariff rate for property directive. And we are anticipating that the new tariff rates will be effective from July 2024. So it is still work in progress. In parallel, what we were also doing was we were working on risk-based supervision framework and also coming up with the guide to supervisory intervention. Because of our new act came, so we had all these options to work on. So the risk-based supervision framework and guide to supervisor intervention hasn't been approved by the board yet, so that is also still in work in progress. So for now, so this is what we have done so far, and we still got a lot of outstanding work to do in order to actually meet the RBC deadline of July 2024. In terms of RBC, just the highlights, all life insurers, non-life, micro-insurers, and reinsurers are required to comply with the regulation. And as I mentioned, the effective date is July 2024. It's a partial implementation, and gradually the full implementation is by July 2027. The capital now, currently all we do is we calculate technical provision, but now companies will have to calculate capital requirement depending on the risk profile of the company. Some level of proportionality rule we will apply, but how it looks like is something that we are still working on. As the approach is principle-based approach, we are going to heavily rely on good governance and good risk management practices. And as with any other risk-based approach, it's expected to be a dynamic process. We would expect company to have much more forward-looking approach and not only consider current risk, which we currently do, but also think about the emerging risk. Insurers will have 90 days, 3 months to submit the RBC reporting to the regulator. Currently, the time period is 5 months, so that's also going to be shortened. Regulatory capital position will have to be certified by external auditor and CEO. We are also considering the scope and the responsibility of the appointed actuary under the new solvency regime. RBC is going to be based on a total balance sheet approach and the use of market consistent valuation. This is completely new to what we are currently working on because our assets and liabilities right now there's no interaction and we don't use market consistency valuation. So this is going to be quite a big change for us. The quantification of risk-based capital and minimum capital requirement is actually going to be at an entity level and not by fund level, either is at a policyholder level or shareholders level, so it's just at a company level. Although it is meant to be principle-based, we do have quite prescriptive rules of how you go about calculating the capital requirements. And then the individual risk modules are combined using correlation matrix to actually recognize the risk diversification. And if people are familiar with the EU RBC framework, if we are to compare to ours, it is a very simplified version of the standard formula model, where we use either the factor-based or the stress-based approach to calculate capital requirement. The eligibility criteria is also defined for various capital resources, and so the concept of tiering of capital resources is going to come into play. Supervisory target is 130% of RBC, and we expect companies to hold internal capital target above that requirement. And there are a number of transitional measures to support insurers to fully implement RBC by July 2027. With regards to ORSA, we expect, this is actually for company, this is not really for the regulator. We expect companies to assess their own risk and solvency, and then kind of determine the quantity of economic capital that they would require for the level of risk that they have, and also ensure they have adequate level of economic capital to cover those risks. So the effective date is actually immediately when the directive was issued. So right now we would expect companies to start conducting gap analysis, having an action plan in place. In total, only around 16 companies has been selected where they are required to perform ORSA. So this is based on some threshold, coming up with some threshold. And there is some sort of extension for companies who are currently going through mergers and merger process. We expect the role of the board is going to increase quite significantly compared to the current situation, where they are responsible for implementing ORSA. They are meant to own the ORSA process and actively steer the process and making sure the companies have adequate conditions and infrastructure in place to conduct that ORSA process. Board is responsible also to appoint an ORSA operational owner, which we expect will evolve into gradually into a sort of a CRO role. And companies are expected not only to come up with the ORSA policy, but they are also required to demonstrate that the outcome of the ORSA policy has been effectively used in the decision-making process. And they are expected to provide annual ORSA supervisory report to the regulator. So basically, that is just going to be the summarized version of the internal report that they are meant to give to the board. Okay, so what I'm trying to show here is our risk-based supervisory framework. Mind you, this is still in work in progress. What this shows is, tells us, is it guides the regulator in terms of how we should be supervising on a risk-based approach. Our supervisory cycle is going to be for 3 years, which means that every company will at least be supervised on a risk-based approach during those 3-year period. What we are not saying is that we are getting rid of compliance-based regulation. It will still be there, but then the way our focus is going to change. Just highlighting the key elements, we categorize companies into 4 groups, depending on their significance of having adverse impact on NIA achieving its supervisory objectives, so which is prudential soundness, market conduct, and market development. And once we decide on which companies to supervise, we kind of look into the company to understand what are the significant activities. So it could be line of business, it could be enterprise-wide function, or it could be processes. And it's really the activities that companies do carry out in order to meet their objectives, business objectives. And out of those significant activities, what we do is we then try to understand the type of risk that's going to arise from those activities. We have 9 categories, and I do want to highlight here, we have included climate risk as a specifically explicit risk. So when we talk to the insurers, the idea is we question explicitly on how they are incorporating climate risk into their underwriting policy, into their product development, into their pricing, so that gets captured in that sense. And these inherent risk is actually, it's a gross inherent risk, and at this point, what we don't do is we don't look at the risk mitigation strategies at this point. And then we focus on the governance. We try to assess the governance and the performance of the oversight function. So this is where we are really trying to assess how good is the company in terms of them trying to manage and control risk. So what we do is we look at not only the characteristics of the oversight functions, that are they structured well enough for their own, given the nature and the size and the complexity of the risk, or also the effective performance of the oversight function itself. And then what we have is we come up with the net risk, and once we have overall net risk, then we try to assess the financial resources. Does the company have adequate financial resources for the given level of risk, overall net risk they have? So the key financial resources is capital, earnings, and liquidity, and this is where the outcome of the ORSA comes into play. Once we combine capital, financial resources, we sort of get a composite risk, and that is actually a risk profile of a company. So with this risk-based supervision, what we are trying to do is not only the quantification, but our focus is mostly on the qualitative assessment of the risk profile of the company. And just to highlight very quickly, how the composite risk then translates into a priority rating. And priority rating is then, that's what guides the supervisor in terms of various intervention it needs to take. So the intervention, kind of comes from routine supervision all the way to resolution or liquidation. So again, this is still work in progress. In terms of climate disclosures, companies are required to make disclosures to the extent to which their risk profile exposes them to climate risk. There are a number of disclosures, and the disclosures are required to be done over a period of time. so that we are not putting too much pressure on the companies. I mean, there are a lot of different disclosures company needs to make within 12 months, 3 years, 5 years. The key ones being is company needs to come up with the climate policies. They need to understand the impact of various NGFS scenarios on their strategic plans. Company needs to consider climate component when coming up with risk management frameworks, risk appetite framework, and also coming up with your investment policies. And finally, also trying to link risk climate consideration into the remuneration of the executive management team. So now, talking about the challenges, so what I'll do is I'll first talk about the challenges for the insurers and then talk about for the regulators. What we've seen is some of the board members and the senior management of certain companies are not on board. They haven't really prioritized it. So it's going to be quite difficult for them to meet the deadline. And what doesn't also help is the current remuneration structure of the senior management. It's quite based on a short-term targets. And given RBC is a very long-term issue, that really doesn't help the situation. And this is quite common, with the lack of resources, lack of technical expertise. There needs to be significant, capacity building required. And one of the things with Nepal is none of the insurance company have valuation models or calculation models in-house. And given with RBC, there's going to be more calculation, more complex calculation. The problem that we're already facing is just going to be exacerbated even more under the RBC. So significant changes required to the company's infrastructure systems, more investment is required. Data is also quite a big issue. And from a regulatory perspective, we still have a lot of technical standards and guidelines that we need to issue to support the insurers to actually do the RBC itself. And one of the things is, in Nepal, we don't have a risk-free yield curve, and that's something we need to develop. And even if we develop, we need to understand how reliable is that risk curve, and what is the impact is going to be in that, on our market. We still need to perform quantitative impact studies to really understand on day one what is going to be our impact. So that is quite a big challenge for us. Again, similar to insurers, there is also lack of resources. Significant capacity building needs to be done. Not only that, we need to develop and implement SupTech technology to help us actually do our supervisory roles. And how we are going to apply proportionate approach to regulation is something we still need to work out. In terms of the benefits, the positive changes we see is as we move away from the compliance-based regulation, we hope that it will encourage market development and companies will be able to deliver more diverse products. Companies will also have better understanding of their risk and, then and the understanding of the drivers of their business. As they will be more focused on the quality of their risk management, it will definitely, hopefully, increase the risk awareness and enhance risk culture. And having the adequate capital resources for the level of risk, we hope that will improve the resilience of the company. And the key thing here is the major shift for our context. There will have to be a great, governance, increase in the governance by the board, improvement in the internal controls and processes. And for the regulator also, it is going to be a change in the mindset shift in terms of how we regulate, how we supervise. So it will help us prioritize the right level of supervisory resources to insurers that poses a greater risk to the industry. And also, it will encourage us to take more timely and proactive actions. So, our new Insurance Act gives NIA the explicit mandate to implement risk-based approach to supervision. And with these initiatives, this will help us to meet the requirement. And not only that, it will also help us to meet some of the requirement ICPs. And it will also help the regulator take more proportionate actions. As we move towards the third line of defense and control functions, we hope the insurers, the board, senior management will show deeper understanding, in-depth understanding of the risk, and hence be able to provide value proposition to their customers. So in conclusion, I would like to say that RBC will play a major role in building resilience of our insurance sector. Thank you.
Thank you, Ms. Mathima, for that detailed and insightful presentation. I'd also like to invite Mr. Geji back on the stage. And ladies and gentlemen, we really encourage and hope that you utilize this opportunity this time to maybe ask some questions to our presenters. We have our volunteers with the mics ready if you have any questions to our presenters.
Good afternoon to all. I am having two questions regarding RBC and investment yield rate. As a insurance company, we have to submit gap analysis in 2022 and 23, and in 24, full-fledged RBC we have to comply. So, what will be the impact of gap analysis in financial statement if we partially comply RBC in 2022 and 23? This is my first question. And we have to give gap analysis and financial impacts of RBC to our board also. Just I want to clarify these questions. And second things, as a insurance company, primary stakeholder is a policy holder. And our regulator is providing yield rate, fixed yield rate, that is 6%. And everywhere in valuation report designing, we have to use this yield rate 6%. And suppose we are having yield rate more than 6%, say 11%, 10%, 12%, 10 to 12% is a current yield rate all life insurance companies having. So why declaring bonus rate? Just what about international varieties? The other developing countries, they are following yield rate. Whether we can use that because there is a vast gap in yield rate as per the regulatory fixed yield rate, and companies are earning that yield rate. So what about international priorities, other life insurance companies following? Because all life insurance companies, they want to give good bonus rate to their policyholder. This is my second question. Thank you.
Did you understand the question? Yeah, it's very specific. So thank you for your question. So first question regarding the gap analysis. So we requested for 2 gap analysis, one for RBC and one for ORSA. So the ORSA gap analysis just started, so hopefully companies are conducting those gap analysis. The idea of the gap analysis is for the company to figure out what they need to achieve to implement RBC by July 2024. Whether it's either as a qualitative assessment or quantitative assessment, it's for the purpose it's more for the purpose of the board, for the board of the company, rather than for the regulator. So in that sense, whether you want to include the impact of gap analysis into the financial statement is up to, it's left at the discretion of the company. So that's on the gap analysis. And I understand for ORSA gap analysis, once that is done, insurers are required to come up with the action plan. And once it goes to the board, and once board approves it, you need to submit that to the regulator. So that's something I'm assuming is going to come around in August, September. So regards to the second question of 6% discount rate, we understand this has been quite a issue in our industry for quite a while. But what we are trying to do is, given we are trying to move to RBC and we are going to move into a risk-free yield curve, and also there's a different element of how closely you are matched, how closely your assets are matched to the duration of the liability. So because that is going to come into force from July 2024, we just thought it's not a good time to actually go and change that 6% discount rate. And that's been a little bit of a saving grace for us because our interest rate is going to be quite volatile. It might look right now the rate being around 10%, but gradually it is dropping. So given all this work, what we have to do, what we don't want to create is another volatility in the market. So, as part of the risk-free yield curve when we develop that risk-free yield curve, we'll be considering other element of coming up with the right discount rate. Thank you.
Good afternoon. My question is to Ms. Preksha. So basically, while defining the risk parameters, the percentage of weightage on different parameters for the capital charge, will it be the regulator that will define the parameters or the weightage for the companies, or the companies need to define their risk weightage or the charge themselves?
So as far as I understand, with the RBC directive, we have specified the factors that needs to be used. So the factors has been defined, has been derived based on this region, and one of the purpose of the quantitative impact study is when we apply those factors as prescribed in the directive right now, we want to understand the impact and then assess, and there is a possibility of revising if those factors, if the outcome of those factors is showing that it doesn't look right for our market, so there is a possibility of revision. But all of these factors that you're referring to should be in the RBC directive. Thank you.
Hello. See, right now, for me, RBC looks like heaven. But I haven't seen, I don't think anybody here in this particular market has seen heaven in so far as RBC-based controls and capital and things like that are concerned. The biggest issue here, RBC will entail higher capital. And the higher capital, whether it is available or will be available, whether the promoters or the owners, how they will be in a position to bring in that money, that is the big question at the back of the mind. The second, one step before that, is the understanding of the measures and the quantification, and what is the benchmark on which that is going to be measured to decide what I should do. And the third, who is going to interpret whatever is the result that are coming in. So that's capacity building. That's what Mr. Gigi actually mentioned by showing the Silicon Valley thing. So my question is, everything is fine. You have put the regulation in place, you have put the roadmap, you have put all the steps in place, you may give a template, you may fill it up, you may do everything. I think perfectly all right. As a process it is all right. As an outcome, how are we going to ensure that the outcome is not painful, the outcome is really useful for the market? This is the same thing in the other market. There are some markets who have already implemented RBC in ORSA. I'm aware of it. Even our neighboring country, they are trying to do it. So I feel maybe one by one, why can't you take insurance risk for the time being? Okay, let's measure that first. And let's quantify that and publish, okay, this is what insurance risk is all about. This is what the credit risk is all about. Why are you trying to put everything together and make the issue more complicated?
Sir, somewhere we have to strike a balance between keeping it simple and making it complicated. Approach should be, don't make it complicated unless it is required. So, few areas, as I said, You have to split between direct, you have to split between reinsurance separately you have to do. And in other categories also, analysis, the more analysis you do, it becomes complicated. So first you have to decide this kind of analysis is really going to serve my purpose in the ultimate. Without this analysis also, if I am going to arrive at the same, to tell you the same example, pre-RBC capital was this much, post-RBC capital was almost equal to that, then naturally the question will come, why we need RBC? Anyhow, we have prescribed you this amount of capital. So the difference between the two is RBC is analyzed, specific, scientific, can be justified. The pre-RBC regime of 40% of outstanding claims, 20% of premium, so is not, will not tell you different kinds of risks and what is the extent of risks. So your judgment based on the pre-RBC regime will never be correct. But because of this risk-wise presentation of the entire picture, the decisions you are going to take, that will be more objective and scientific. This is one. Second thing is, suddenly the question came, RBC is already there in US. Banks are following capital adequacy ratio, which is also similar to RBC. And if banks are failing despite RBC being there, so what is the point in having RBC? So the question, if you really seriously study this RBC, you yourself will understand that if 10 failures are happening in pre-RBC regime, in RBC regime only probably 2 will fail. Definitely there will be failures. We may not be able to totally stop it. But 10 will come down to 2. And then even in those 2 cases, the suffering that will be there, it will be considerably reduced. So this aspect takes time to sink into our understanding. It takes time. Unless we do it, we interpret it, we accept it, practice it, we'll never realize immediately. Probably you will realize after 5 years, yes, we shifted to RBC and the results are now visible. So this kind of thing can happen. Madam, if you want to add.
Yeah, I just wanted to add, you know, what he mentioned in his presentation, what really struck me was, unless and until you do it, you don't understand it. So I understand a lot of people ask me about benchmark. I mean, I can give you benchmark of Malaysia, I can give you benchmark of Singapore, I can give you of India, but then the same question will be thrown at me saying, well, that doesn't represent Nepal. For me to get that benchmark results for Nepal, we have to do it, you have to give me the results, and we can do the benchmark. So whenever people ask me, okay, you know, what are we benchmarking against? We actually don't have a benchmark for Nepal. And I know, you know, the same question was when we used the particular factors, which we used it from this region, we got, you know, the question was asked, is that relevant to Nepal? And the question is, I don't know. The point is, once we do our analysis, once we have those results in hand, then I can say whether, okay, those factors are, you know, whether it's relevant to us or not. And the point is, you know, nobody can be 100% ready for RBC. For us, our risk-based approach, supervision is a destination. And you know, this is the start of the destination, and we will have to do a lot of trial and error. And I do take a point that, you know, why make it so complex? Why bring it all at once? But it's unless and until you understand the interactions that's going on. You know, we do stress tests in our current valuation with mortality, interest rate movements, but the understanding is still not there. But when you then combine all those risk interactions, that's when you truly understand the impact of various risks on your company. So yeah, thank you.
Hello. Yeah, so just my one question. That as a stakeholder, we are happy to support the regulatory intention to modernize this existing RBC solvency system. But at the same time, what our feeling is that certain part of RBC directive need to be adjusted according to the existing situation of Nepal. So when we are talking about many part where the liability valuation or asset valuation, where we have many unclear items still we have. So I think there are the few rounds of discussion still required from a regulator and to the industry that what should be the result about after the testing. Might be the stress testing or maybe the another type of the modeling results. So first we have to understand about the impact analysis. And then because of the time is running now, we have very limited time. So what is our main plan, how we can cope with this timeline? So this is my just one question.
So I do appreciate that the RBC, there's still a lot of outstanding issues which impacts life insurance sector more than non-life. And the biggest one clearly being the risk-free yield curve. So you can, without the risk-free yield curve, you can't calculate the technical provision. And it doesn't really matter how much you do impact studies on those. So I do take a point. And yes, it's true that we do need to work out some of the outstanding issues. And as I mentioned in my earlier slide, is there are a number of technical standards, guidelines that we still are working on, that we still need to put out, but at the same time, what we would need support from the industry is if they do that impact studies, we would like to see those results because it's quite new for us. So as we understand, if we look at across the different insurers, we can understand how the RBC is actually impacting them. But yeah, so there are still quite a lot of technical standards work is outstanding.
Sir, many things we don't get right at the first instance itself. RBC is one such thing where you cannot say, for the first time itself, we have done everything rightly. It's a process. We do the things, we make some mistakes, then we learn from the mistakes and we improve upon that. So probably this is what we have to accept, and so many things we learn only when you implement and come back. So, see, unless you actually involve yourself and raise the issues, the regulators will not realize that this is something wrong. So, every one of you should come and approach and tell them what is the right thing. Probably they will be doing the right things.
My question is, in fact, it's like as Priksha ma'am had mentioned in her presentation that senior management and board are less interested or not serious so much and all. The reason behind that, as a management part, I would say we don't have resource person to explain us how exactly the things have to go through. In most of the presentations, we were just told that it has to be done. But how it has to be done, Mr. Sangana has rightly mentioned that he started from his own company. Here in Nepal, we have to depend on foreign experts for most of the work of the insurance, including actual evaluation. And we don't have any basic thing such as modeling even. And yesterday, it was rightly mentioned that innovative products, when has to be brought to the market, it's reluctantly approved. So the main reason behind this is we definitely lack a sort of resource in this sector. We welcome the RBC and such forward-moving decisions by the regulator. After all, we are actually doing this stewardship of public money, no doubt in that. But the expertise which we require collectively from the industry, from the regulator, is there. So we are actually seeking for direction
in terms of practical approach, not only theoretical, the practical approach on how to do this, because the deadlines have been set. We are aware on this part, but in the previous meeting which was organized by authority in the presence of World Bank expertise, it said that even Sri Lanka took 9 years to implement this regime. So we have kept the deadline of 4 years. And the main reason why the management and the board seems to be a bit of reluctant in this part is we really lack, we are searching for the resources which can groom up our manpower or human resource to implement this. So I request in this forum, even the regulator, to have numerous sessions on this RBC and solvency and then this climate-related issues, practically explaining or practically having the exposure expertise to speak in the forum, to present in the forum so that we have confidence. And in fact, we are also very concerned and serious to implement this part. So it's my request to the regulator to work on this part. Thank you.
Just thank you. Yeah, we definitely take your point, and we do recognize a lot of capacity building needs to be done, not only in the insurer's side, but also in the regulator side. The only thing I would really like to point out is when people talk about the practical training, what would be very helpful is when people come to those training, they've actually done something themselves, so that when the questions that comes across are more practical, because otherwise that training is just going to be ended up becoming a theoretical training. And that's something we have seen where when companies talk about practical training, we are not quite sure what they're asking for. And if they can be a bit more specific, and if we can understand that, if we see that they have gone through that process and they have a particular practical issues, then we can definitely have a training at the right level. So I would really encourage companies to have even one person doing the research. And as our fellow speaker mentioned, in India there was no RBC, and he learned it himself, right? So, I'm sure we can do that same, and of course with the external help also does help us to build our capacity. Would you like to?
Ladies and gentlemen, time is running out, so we'll just take two last questions.
One question,
and then
I have one
Sir,
question.
only on this issue, I'd like to tell one or two things. There are two components of it. One is a mechanical process, and second one is the judgments involved. When I said capacity building is important from this judgment point of view. You need people who can rightly judge the things. Rest of it is mechanical. Even computer can do, even an ordinary person can do. That should not be a problem. Only you should see how we can build a capacity of people who can take right kind of judgment. That is what I said. They should be constantly in touch with all dynamic forces, all dynamic developments. Only those people, even if he is a very average person, he will take a correct judgment and correct decision. Even if a person is brilliant, not keeping in touch with the current developments, he will not be of any use. So on this line, we should work on that.
Only one point I have.
Thank you so much, sir.
Only one point I have. When you're in a developing market and where the insurance penetration has to grow and people are finding it to come to insurance, we have to make an affordable insurance product, affordable price, etc. My only fear is, yes, we should go through the RBC. I'm not saying no to that. But will it convert a low-cost insurance market to a high-cost insurance market? This is a big question, because you want to penetrate, you want to develop the market. At the same time, you also want to save the company from failure. That is, you don't want insurance system to fail. And therefore, you are putting in RBC and type of system. So it's a question of, dilemma. It's a dilemma of development versus ensuring system is safe and sound. So this is an observation, it's not a criticism or anything like that. Just an observation.
Right, sir. Instead of considering capacity building as a cost, can we think of this capacity building is an investment? Over the years, whether it is going to yield the result, then I will go for this investment. If it is not going to yield me any return, then probably I may not be building capacity. So I think there is need for looking at it as whatever capacity building we do, it is an investment for our future, and as an industry as a whole, it will get benefited over the years. So this we have to examine.
So thank you so much, sir. As a research person in Nepalese market, I have some experience about the Nepalese insurance market. Definitely here the problem of capacity building in Nepalese market, but we can do everything like such type of quantifying analysis in this market because it is very, very much required in Nepalese market and it is very easy. I think I think it is very easy to analyze RBC because whenever we quantify all these things of financial statement, we can get the RBC. I think Sangana sir, I am agree with Sangana sir. Without jumping in pond, we can't know how to swim. So we should first of all try to do our financial statement to quantifying in different risk assessment factors, so we can very easily find the actual position of, and my last research before 5 years, I have done one research in Caramel model, which was for capital requirement in Nepalese market. So that was the research in which I have got that the capital requirement at that time 2 billion and 5 billion for life and non-life market, it was very correct, sir. So we should quantify and we should do the analysis and we should do the research in Nepalese market, sir. I'm agree with ma'am and sir. Thank you so much for your nice presentation. Thank you.
Can I say a few words, actually? After hearing after hearing I think, views of the insurers who are the real stakeholders in this regard. Generally what happens is when you come with a new thing, generally it won't be accepted. It takes time to accept the thing. The reason why they don't accept is, first of all, they may not be understanding why that is required, why you should be different from the older one. What is the advantage of doing that? My suggestion to Prachya here is, you see, just take 1 or 2 examples of an insurance company. Under the existing solvency, what we are having, solvency 1 we can call it, or solvency 2, because you are calculating the required solvency margin based on mathematical reserve and the summit risk. We have not taken into consideration the investment risk in calculating the required solvency margin. Okay. You do that calculation, we are able to demonstrate whether the company is solvent or not using that. Now, when you want to switch out to RBC, the idea is good. What you want to address is, you want to address each and every risk the company is facing. Generally, we are categorized into 4 risks. Okay, the capital risk, operational risk, investment risk, and other demographic risk in this regard. So my suggestion is, you try to demonstrate if you use RBC, this is your capital requirement, whether you are solvent or not. If you show for a company, for instance, 1 or 2 companies, under the existing model, this is the amount of capital that is required because you need to maintain the solvency, right? If you use a RBC model, this is the amount of capital you require. So the management of the insurers will understand where they are. They will be able to appreciate that and accept that. Is it correct for you, what I said? Say yes or no. Have you understood? I think nobody
Sir,
understood. That's what it looks to me.
I will add only one point here. For about 5 insurance companies of Nepal, what I did was I downloaded their financial statements from the website. Then I tried to calculate pre-RBC what is the capital requirement, and if RBC is done, what is the capital requirement for 5 companies. Now, what I found was, in one case there is a release, in another case there is an increase. Increase ranged from 10% to highest was around 20, and there were some of 10%. So unless actually you do this, and my calculations, I cannot say that they are 100% perfect because certain things I have assumed. What I have assumed are not very material. Ultimately, you will get probably what I have calculated, 10% here and there. So unless, that is what I said in the beginning, unless you do it, don't presume that the RBC is going to increase my capital requirement. Even if it increases the required solvency margin, that may not require contribution of additional capital, because already somebody is having 3 point odd as a solvency ratio in pre-RBC regime. RBC, even if it increases, probably 3.20 may become 3. So you have adequate solvency, you need not bring any additional capital contribution. So this is how for each and every case, you have to examine what will be the impact of this on me, and then you have to go ahead with those kinds of things.
Does it work? No.
Yeah, it is.
Yes, it's working. Okay. No, really. I would like to thank the presenters very, very much for the excellent presentations, and I would really like to thank you all for your fantastic question. So that shows me really what a challenge it is to move to RBC or to risk-based supervision, risk-based regime. I was in that situation 15 years ago, no, 20 years ago, and it's not only about capital. Capital is important, definitely. You need, as it said, you just need to start somewhere and to calculate it. And the first thing will most probably not be right. Yeah? You need to do it for several times. There needs to be the dialogue with the insurance supervisor, and that's an ongoing process. Yeah? That's an ongoing process. But what is equally important, yeah, because the discussion was mainly about RBC, is equally important is the risk management and the ORSA. The ORSA, I think, is really the core and the heart piece of a risk-based regime, because that will provide companies with the major benefit that they have, because the ORSA can be linked and should be linked to business decisions. It will help you to better understand the risks that you can take on board with the capitalization that you have, and you can take then the business decision which products you want to move on the market. You have a much better transparency on the risks themselves and the capital that is needed to pay out the claims and to support these risks that you take on your balance sheet. I just really wanted to say it is a journey. It will take time. It will take a lot of dialogue, that's for sure. But as long as you keep in touch between the supervisor and the industry and the market, I'm very, very, very sure it will be successful in the end. But it will take years. It's not a matter of just 1 year or 2 years. So my experience, it was 10 years. It took 10 years in the end. So it's a journey, and I really would like to encourage you to start. Once you start to calculate the RBC, once you start to implement an ORSA, or to start thinking about how an ORSA could look like, once you start to think about how a risk management in your own company could look like, that will benefit you in the end. So that would be more or less my last words. And thank you so much, and also the Nepalese authority. You made a great journey in a very, very short time. and I think it's challenging for everybody, but good luck.
Thank you very much. Thank you, Ms. Manuela. And thank you to our presenters as well for presenting such insightful information through their presentation. And like Ms. Manuela mentioned, it is all about having this discussion back and forth about communicating ideas, experiences, and sharing best practices that in turn will create a win-win situation for everybody involved. And now to thank our presenters and to present them with a token of appreciation, may I please invite on a stage Mr. Silwal. And I'd also like to thank Mr. Geji and Ms. Mathema for their presentation on risk-based supervision framework. Can we please put our hands together for a big, big round of applause for both our presenters, I think, who really brought out some very crucial points. And thank you to the audience one more time for being engaging, for being interactive, and for putting forth your very valid questions that also showed how eager you are to learn and engage as well. Thank you to Mr. Sangana Geji, insurance expert from India. And we'd also like to thank Ms. Preksha Mathema, consultant actuary from Nepal Insurance Authority. Ladies and gentlemen, we are coming towards the end of the last session. And now, Ms. Manuela already did put some of her remarks when we closed our third and final session. But may I please invite her one more time for sort of like a closing remarks from her side as we come towards the end of the Asian Insurance Meet 2023.
Thank you. Thank you so much, and thank you again for this very warm hospitality and for really being invited to be here. It was an amazing program over 2.5 days. We started on the first day with supervisors only so that we could really also get into the details of the capacity building needs, also discuss amongst ourselves and share the experience from the region on risk-based regimes. Yeah, I say on purpose risk-based regime because it's not all about solvency. It's then the regime consists of 3 pillars. You have the pillar 1 on the solvency, you have the risk management pillar, and I still believe this is really one of the very most important pillars. And then you also have the disclosure. Then the second day was more or less our day of natural catastrophes, and it was absolutely amazing what we could hear in this day. It was your first day and our second day. We started in the morning with climate, which is really no longer an emerging risk. We see here building resilience of insurance towards emerging risk. It is an already emerged risk, and we need to deal with it. And insurance can really provide huge benefits of providing resilience, of also helping to build back quickly, which is important also for a country, then not to have too much impact into the economic growth and into the sustainable growth and economic sustainability of a country. So every natural catastrophe is denting into the GDP growth, into supply chains, but when you have insurance, and when insurance can quickly help to pay out, that is definitely very helpful to get back into the economic cycle quicker where you were before. And not to forget about the role of insurance with regards to risk mitigation, risk reduction. I think this is really a very positive message for the entire room. There is a role for insurance in these natural catastrophes. There is a societal role as well. So we are helping people. We are helping people to get back into businesses, and we are also helping people to deal with the loss. I think that always drove me to be in insurance, yeah, this thought of the societal role of insurance. So in the morning we had the climate, and then we went to earthquake. That was very interesting, and then in the end also agricultural, and I must say I have learned a lot. I have learned so much, yeah, from all the presentations on index insurance, from all the pilots that are being done. I think you're very much at the forefront of the scientific, of the science here. So that's excellent. And today, yeah, very well done, with a super interesting discussion on life insurance. It is important. I was very impressed also from the Japanese colleague how things are interlinked, yeah, also with demographic change, with the smaller size of families, with the economic growth. So that was very, very impressive. And now, in the end, I think that was really the highlight, yeah, of the entire conference, the exchange, the vivid exchange on risk-based regimes and risk-based capital and capacity building. So thank you so much that the IIS, together with the A2I and with the Asian Development Bank, could co-host this fantastic conference. And we will definitely go back with a lot of food for thought, and also thinking how we could also help more to provide this much needed capacity building. In this sense, thanks again to the chairman, to the board of the Nepalese Insurance Authority, and it was a great pleasure to be here. And Nepal is definitely a place I need to come back again. For sure. Thank you.
Thank you very much. Thank you very much, Ms. Manuela Zoemuller, for your remarks. And yes, all our international delegates as well. We hope that this was really a fruitful learning. We now move towards presenting token of love to a few of our distinguished guests, for which I'd like to invite Mr. Silwal back on the stage to present these token of appreciation. I'd also like to invite on stage Ms. Catherine Mitzi from Asian Development Bank to kindly join us on stage. We'd like to thank Asian Development Bank for being the co-organizers, one of the co-organizers of this Asian Insurance Meet 2023. Also, Ms. Maria from Asian Development Bank, Maria Cristina Pascual, we'd like to invite her on stage as well, from Asian Development Bank. And for bringing this entire event to life from our event organizers, House of Rajkarnikar, may I please invite Ms. Meenu Rajkarnikar on stage. And now to present the token of appreciation to Mr. Surya Prasad Silwal, may I please invite Mr. Rajaraman Paudel on stage. We definitely... We'd like to thank our chairman, sir, for always fulfilling his fantastic role as a leader, as a chairman in the Nepal Insurance Authority, and bringing forward much needed changes in this sector as well.
I'd like to say something. I'd like to request our respected chairman, sir, to present a token of appreciation to our gorgeous and intelligent anchor, Subeksha, for playing a key role to make our whole event successful.
MC, most of the time I have to invite my own name, but thank you, ma'am, for doing that. I'd now like to request Chairman Sir for the final vote of thanks.
Esteemed participants, ladies and gentlemen, on this momentous day, as the chairman of the Insurance Regulatory Authority of Nepal, I stand before you to extend my heartfelt gratitude and offer a vote of thanks on the closing of the Asian Insurance Meet 2023, focusing on the imperative theme of building resilience of insurance toward emerging risks. This remarkable event has brought together regulators, insurers, reinsurers, intermediaries, and industry experts from different countries, all under one roof, to discuss and deliberate on the crucial theme of building resilience of insurance toward emerging risks. In this conference, we had the opportunity to learn about the risk-based approach and the experience of different jurisdictions. With the continuous support from IAIS, ADB, and other international organizations, we will definitely succeed in this mission. As Minula had mentioned in the first day of the conference, we have the privilege to learn from experience of other jurisdictions and do not need to start from the scratch. The pressing issue of climate change was rightly addressed in this event. And we also learned that it not only poses challenges, but also creates opportunity for the insurance sector. We just need to act collectively to benefit from this opportunity. The conference also highlighted the importance of technology and digital solutions like SupTech, RegTech, InsurTech, risk modeling tools, and how it enables us to rightly adopt risk management practices, and prudent supervision. I believe the session of leveraging capacity building of supervisors has given a clear idea regarding the need of the jurisdictions participating in the conference. Humble request to our co-organizers, IAIS, ADB, and A2II, to extend the support and capacity building opportunities as per the need of the countries. As mentioned by fellow regulators from Maldives, the road has already been built and there is heavy traffic now. We need our support, your support to manage the traffic and streamline our core functions. There is no doubt that parametric insurance is catalyst to expand agriculture insurance. As Ms. Neha Yadav and Mr. Alok Kumar rightly pointed out, modeling the past data and future projections will help insurers underwrite insurance for loss from natural disasters like flood, earthquake, and landslide, to name some. The experience from Japan and how the nation once poor and struggling has now emerged one of the biggest economies in the world is a great learning and motivation to all of us. Thank you, Mr. Yoshi, for sharing it with us. I believe all the presentations, discussions, and interactions have proved to be great learning experience, and we will each take back the learnings from this conference and incorporate them in the function of our organizations. Distinguished participants, as we come to the end of this third-day conference, first and foremost, I extend my sincere appreciation to each and every participant who has graced this conference with their presence. Your active engagement, meaningful contributions, and eagerness to share knowledge and experiences have been the driving force behind the outstanding success of this event. I encourage you to take the lessons learned here back to your respective organizations and implement them for the benefit of the industry. Ladies and gentlemen, a conference of this magnitude requires meticulous planning and execution. The expert ideas and guidance from the steering committee, along with the continuous support, guidance, and strategic insights from our co-organizers from the very start, enables us to plan and organize this event. I extend my heartfelt thanks to the organizing committee for their tireless efforts, planning, thoughtful selection of topics, and exceptional coordination. I would like to extend my sincere appreciation to our esteemed co-organizers, the International Association of Insurance Supervisors, Asian Development Bank, and the Access to Insurance Initiative. Your support and partnership have been instrumental in bringing together regulators, industry stakeholders, and representatives from various institutions, fostering a conducive environment for knowledge exchange and collaboration. A special thanks to the team of ADB who helped us in facilitating the delegates participating in the event. Additionally, I offer my deepest appreciation to the distinguished speakers, moderators, and panelists. Your expertise and engaging discussions have enriched our understanding of the emerging risks facing the insurance industry. Furthermore, I would also like to express my gratitude to our media partner, Asian Insurance Review, and all my friends from media for their invaluable contribution in promoting and covering this conference. I'm deeply thankful to our generous sponsors, Nepal Reinsurance Company and Himalayan Reinsurance Company, for their support in sponsoring the delicious lunch and thoughtful conference kits for our participants. Also, a special gratitude to the Nepal Insurers Association and Jeevan Bima Sangh for hosting the extravagant gala dinner with beautiful cultural dance showcasing the rich culture of our country. A special word of thanks goes to the enthusiastic volunteers who have dedicated their time and energy to ensure the smooth functioning of this conference. It is needless to say that this event would not have been possible without the exceptional effort of the event management team. Their dedication, attention to detail, and tireless commitment behind the scene have been instrumental in making this conference a big success. Furthermore, I would like to extend a heartfelt appreciation to our beautiful and charming EMC for skillfully guiding us through the various sessions and ensuring a seamless flow of the event. I would also like to express my gratitude to Hotel Yakindati for providing us with an excellent conference venue and comfortable accommodations for our esteemed participants. In conclusion, I extend my sincere thanks to all the participants once again. I hope that your time spent here has been both productive and enjoyable. I encourage you to explore the enchanting beauty of Nepal and experience its rich cultural heritage. I eagerly look forward to the opportunity of welcoming you back again in the future. Nepal Insurance Authority would definitely reciprocate if invited to the events organized in your jurisdictions. To conclude this event, let us acknowledge the contribution of each and every one of us with a big round of applause. Thank you all once again, and may you all have a safe journey back to your respective destination. Thank you.
Thank you very much, Chairman, sir. Ladies and gentlemen, I believe that we all agree that we live in a world that is full of uncertainties and risks. Individuals, families, businesses, properties, assets are all exposed to different types and different levels of risk. The insurance sector, apart from protecting individuals and businesses from many different potential risks, also contributes significantly to the general economic growth of the nation by providing stability to the functioning of businesses and generating long-term financial resources for the industrial projects. So kudos to everyone in this room, and thank you for the work that you do. We hope that these past 3 days were filled with insights, information, and knowledge that help you move forward navigating the uncertainties and risk yourself in the insurance industry. Thank you once again for your gracious presence. It was an honor and a pleasure to be your host for the Asian Insurance Meet. Thank you, ladies and gentlemen, and please do join us for some lunch at the Regency Hall right behind this hall. We hope that you have an enjoyable rest of the stay and a safe trip back home. Thank you all and have a good day.